NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you The investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Welcome, you're watching our Ask Profit, the afternoon edition. I'm Mahima Vacharani and this is a show that gets all your stock-related queries answered. If you've watched us daily, you know the drill. Try to call us or send us your query on the WhatsApp numbers that are flashing on your screen up there. With regards to where the markets go, the Nifty 50 is almost at its day's high point, up by about 0.5 odd percent. The VIX, however, has spiked up since we last spoke, up 6%, so that indicates volatility. The Bank Nifty now, still in fact trading flat around the 57,100 odd levels, 190 odd levels. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are doing well. You have, of course, your consumer names, HCL Tech, etc. doing fairly well, but Hindalco, JSW Steel, so metal names are tanking and seeing profit booking. Let's try to pull up the mid cap 150 and the small cap 250, holding up, but have cooled off from its day's high point. For the mid cap 150 trading 0.2% higher, underperforming the benchmarks, and so is the small cap 250 up by about just 0.2 odd percent. So that's with regards to where the markets go. Let's start taking in your queries, and to answer them we are now joined by Narendra Solanki, who is the head fundamental research at Anand Rathi, joining us now, and Kunal Shah, senior technical and derivative analyst at Miraset, also joining us now. Welcome to both of you gentlemen, and a very good afternoon to you. The first question that we have is on FMCG names. Rakesh Gupta from New Delhi is holding 60 shares of Britannia and 100 shares of HUL. Wants to know, and also Nestle by the way, wants to know if he can continue to hold this considering the monsoon is below expectations. Narendra, your view on this one?
Yeah, good afternoon, Mahima. Yes, see, we have a very long-term and constructive view on the sector. But having said that, there are two things you need to watch. One is the inflation numbers. In latest quarter results, what we have seen is that there has been some gradual volume recovery, but it is on a case-by-case basis and it is patchy across the sector. So some companies are showing good numbers while others are struggling. Plus, there has been some pass on of the rising costs of raw materials, but it's not a complete pass on. So again, we have to see how different companies strategize on that. Now, coming to the monsoon, right now, whatever we have seen on the reports front, the monsoon is already delayed and are expected to be below normal. And let's wait for another week. I think we are hearing that by 20th, the monsoon would be kicking in. So that would be a key important trigger to track in terms of for forecasting the recovery in terms of volume. So I think on short term, there may be some volatility in the sector because of these concerns. But yeah, if the person has a horizon of 1 year or more, then I think the sector is valued decently. And if the recovery comes, then the overall growth would be coming back to the sector.
Okay, so that's the view on FMCG. One more query on an FMCG name itself, Kunal. Mrs. Bector's Food. Krishna from Bengaluru wants a medium-term view on this one. What are the charts indicating?
Yeah, I think definitely Bector Food has witnessed some good correction and now it is showing some exhaustion at the lower levels. So from a short-term to medium-term perspective, continue to hold it. One can keep a stop loss of 173 on the downside and look for targets of 205 on the upside.
Okay, all right. The next one that we have is on HCL Tech. Priyanka Asha from Mumbai is holding 365 shares, bought at the levels of 1355. Wants to know from a long-term perspective, is this a good bet? Narendra, considering the Servam AI acquisition that they've made, we've seen an uptick of 2.5% on the counter and it's upheld that throughout the day per se. But how are you viewing this acquisition and is it a good hold?
Yes, definitely. It's a very good move, and it shows the confidence of the company in terms of investing in an AI company. And this is the first large cap company wherein we are seeing some investment happening in the AI, although a bit late. But yeah, definitely a positive sign. And it also shows the optimism of the management in terms of taking on hands-on approach on the investments front, and in the sector also, what you've seen, there has been very low R&D investments happening in the Indian tech sector. So I think this shows the tide is turning, and it is sentimentally very positive for overall sector and for the stock. So we have a positive view on the stock as well, and we have a buy rating on this.
Got it. Okay, so that's the view coming on HCL Tech. The next one that we have is on Vartech Vobag, 200 shares, bought at the level of 1170. This is Harijit from Mohali. He says that he's sitting on profits. The current market price, let's try to pull that up, 1765, up 8% today. Kunal, should he book profits, continue to hold? What are the charts indicating?
I think definitely continue to hold from here. Say 1700 was the earlier swing high resistance that has been taken out, and on the monthly charts also we might see the fresh highs coming in. So overall it can go towards the mark of 2000, 2100 in the very short term.
It's time for a rapid fire round. Narendra and Kunal, try to keep your answers as short as possible. The first one that we have is on L&T. Our viewer has been holding since the price levels of 2100. Kohinoor Ghosh wants to know whether he can continue to hold this for a year or so. Narendra?
Again, right now we do not have any active coverage, but looking at the overall sector, we have a very positive view. So the person can hold.
Okay, GMDC 125 shares is what Pramod from Bengaluru has bought at the levels of 635. From a slightly long-term perspective, what are the charts indicating, Kunal?
Hold with a stop loss of 585 on the downside.
Okay, Dixon 12 shares bought at the levels of 12,150. Can I continue to hold this from a long-term perspective? Dilip from Kolkata is asking this. Narendra?
Yes.
The next one is on United Spirits. What's the 12-month target for this one? Our viewer Gautam from USA is holding 1600 shares bought at the levels of 1007. Kunal?
Continue to hold, can go towards 1400.
Okay. The next one that we have is on Wockhardt Pharma. Parag from Mumbai has bought 25 shares at the levels of 803. From a short-term perspective, is this a good hold, Kunal?
Yeah, hold with a stop loss of 1782 on the downside.
Okay, the next one that we have is on NTPC. From a 6 months view, is this the right time to enter, Kunal?
Yeah, definitely. One can enter at the current level.
Vari Energies, from a slightly long-term perspective, is this a good bet for a long-term perspective? Dipti from Chennai wants to know. Narendra?
Yes, definitely.
The next one is on Hitachi. Our viewer wants to know from a slightly short-term perspective of 6 to 8 months if this is a good hold. Hitachi Energy, Kunal, is what our viewer is talking about. Mahalakshmi from Hyderabad. Your view on the charts?
Yeah, I think overall we have seen a very good run up into the stock. If it breaks 36,000 on the upside, then probably one can go on the long side.
Okay, the next one that we have is on metal counters. If this is the right time to enter 50k into metal counters, would you recommend that, Narendra, considering we've already seen such a good run up?
Is it about sector or stock?
Metal counters, any metal counters.
Yes, definitely. Metals, we are very positive on, especially we are positive on non-ferrous metals like aluminum and copper. So our client can invest in the stocks within these sectors. We are positive on Hindalco in terms of aluminum.
Got it. Okay, so that brings us to the end of this first rapid fire round. Time to slip into a very short break, but don't go anywhere. We'll be taking more queries on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
You're watching Ask Profit. It's time for our second rapid fire round. Kunal and Narendra, you both know the drill. The first one is from Anuj, who's writing us from Delhi. Sirma STS Polycap, where is the charts looking more attractive, Kunal?
I think from the current levels, both are not looking attractive. The risk to reward ratio is not favorable.
Okay. NetWeb or MTAR Tech, any of these that you like on the charts?
NetWeb looks good. One can go long from the current levels for 3 to 4% upside.
Okay, the next one is on Reliance. 250 shares is what our viewers bought from a long-term perspective. A good hold, Narendra?
Again, not in coverage or neither in active recommendation.
Okay, the next one is on Varun Beverages. Bought at the levels of 453 from a long-term perspective. Continue to hold, book profits. What would you recommend, Narendra?
Can continue to hold.
Okay, the next one that we have is on IRFC. Our viewers bought it at the levels of 132. 1950 shares is what Tushar from Bengaluru is holding. Continue to hold, Kunal?
Exit on bounce.
Okay, Ola Electric, 500 shares bought at the levels of 63. Book loss, continue to hold, Narendra?
Again, no coverage on the stock.
Okay, the next one that we have is coming in on Procter & Gamble Health and Hygiene. From a slightly short-term perspective, is this a good hold, Kunal?
Yeah, continue to hold.
Okay, the next one is on Kalyan Jewellers. 200 shares bought at the levels of 402. From a 3 to 6 months time frame, what are the charts indicating, Kunal?
I think already the stock has witnessed a sharp correction, so there could be a pullback towards 440 on the upside.
Okay, Titagad. Aniket from Karnataka wants to know if this is a good buy at the current levels. Narendra?
Yeah, no coverage on the stock, but we really like the sector. So based on the sector, you can take a call.
Okay, the next one is on MMTC. A good buy for the next 12 months. Venkatamani from Bengaluru wants to know. Kunal?
Yeah, MMTC has also witnessed a good run-up, so continue to hold.
Okay, the next one that we have is on BEL. 10,000 shares bought at the levels of 453. Rao from Vijayawada wants a 6 months view on this one. He is sitting on heavy losses. What is your recommendation, Kunal?
BEL, I think one defense stock which you continue to hold. If he has a short-term view from here, if it closes below 395, then exit your long.
Is this a correct time to buy PG Electroplast from a long-term perspective? Chandrasekhar from Hyderabad wants to know. Narendra?
Yes, can buy, but the investment horizon should be at least more than a year.
Okay, Newland Laboratories, is this a good time to buy at the current market price from a short-term perspective? DGK Raju from Vijayawada is asking this. Kunal?
No.
Okay, the next. All right. Okay, the next one that we have is on Gujarat Gas. Our viewer Madhava has bought it at the levels of 415. 100 shares is what he's holding. Continue to hold. Average. Narendra?
No coverage on this stock.
Okay, ITC is the other one from a long-term perspective. Is this a good time to enter? Narendra?
Yes, definitely can enter, but as we just have talked about the FMCG sector, it may take a quarter or two for the sector to show performance.
Got it. Okay. With that, we are completely out of time on this edition of Ask Profit. Kunal and Narendra, thank you so much for taking out the time and helping us answer all those queries. But viewer, it's time to slip into a very short break, but don't go anywhere. We'll be back with India Market Close on the other side of the break.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards, coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia, and it's a decent picture, at least for the benchmark Nifty 50. What you're seeing on the screen, of course, is the intraday chart for the Nifty 50. We're at the high point of the day, and keep a close eye on the level, because 23,990, we're testing that 24,000 resistance. We're yet to break past that and hold. The next 1 hour is going to be absolutely critical here.
Absolutely, and that's where the concerning area is right now. If we close above 24,000 levels, then yes, there is some positivity, but otherwise that consolidation phase, it seems, will continue, because this is where you're seeing that highest amount of resistance which is coming in at 24,000, right? What is interesting is with regards to banks. If you pull up Bank Nifty, and if you have to compare the PSU space versus the private banking space, in the last 1 month, it's the private banks which are playing a catch-up, because in the morning when I saw 20-23% is the kind of returns that you've seen in terms of PSU banks versus negligible returns in terms of private banks as well. And that's where the catch-up is probably. The other thing what is interesting is the contributors. Look at the contributors, Alex, today.
Before we do, let's pull up the heat map for the Nifty 50, because 29 odd stocks in the green, or 30 stocks in the green right now. And in fact, those contributors that Hiral was just referring to will be evident in just a bit, because look at this, right? Reliance Industries with gains of about 2% or so. In the second line somewhere, you will see HDFC Bank. There you go.
Little
so
more
1% or so. So these two.
Infosys around 0.7%. So good contributors.
Very good contributors. At the bottom of the screen, you'll see Hindalco right at the bottom, and that's the metal pack as a whole. And we'll talk about that in some more detail.
And you have JSW Steel, Tata Steel, that entire metal pack which is seeing profit booking today. The other thing is you have Indigo, which was seeing gains over the last couple of days. That stock has come off as well. Likewise, with regards to Tata Motors PV, they did come out with their annual report where they've cited a couple of concerns in terms of margin pressure on the back of the Chinese market, and that's the reason why that stock is down 0.7 to 0.8%.
But here, State Bank of India in the public sector banking space, what Hiral was just referring to, that's evident for the Nifty 50 as well, where you're seeing a pretty heavy name on the benchmark causing a little bit of a downer. But pull up the contributors chart that Hiral was just referring to, and you will see HDFC Bank and Reliance Industries right on top. Bajaj Finance has actually made quite the run from Friday onwards.
Bajaj Finance and Finserv, both of them, 5 to 7% is the kind of up move that you've seen on both these counters over the last 5 to 7 trading sessions. But categorically, metal space here on the downtake, SBI from the PSU banking space. HUL is also somewhere in the limelight. It's interesting to see a Reliance Industries player catch up in today's session. 35-40 points is the kind of contribution coming in there. Broader markets, you know, that's where you're not seeing that kind of action today. I think that it's trying to come up. But if you see from the day's highest levels, quite a bit of a downtick coming in there. And that mild recovery that we are seeing, 0.3% here.
For the small cap index as
Likewise,
well.
I mean, in fact, the recovery in the small cap index is much lower. Let's look at the advanced decline ratio, because that was somewhere pleasing when we started off the trading session today. And there you go. I mean, it's kind of become even Stevens from where we started off.
Yeah, certainly. And the other factor that I do want to highlight is the VIX, because over the course of the last couple of days, you've seen a cool off, and today in particular, you've seen a significant drop in the volatility. We're now trading at 13.4.
This is very encouraging. You know, any levels below that level of 15 in terms of VIX is telling you that the cautiousness in terms of markets is just going away. So the sentiment, as everyone has been talking about, is very positive right now in terms of markets. The only thing that is missing is action.
Yeah, and lastly, just pull up the sectoral indices, because I want to see what's leading the screen right now. You have Realty, which a lot of people are calling the barometer for sentiment in the equity markets. Whenever the equity markets do well, you will generally see this cohort of stocks do well as well. IT on the back of HCL Tech, and there's quite a bit to talk about with regard to HCL Tech and the Sarvam AI fundraise, and that is leading the market higher as well. But oil and gas through Reliance Industries and a couple of other sectors doing okay. Metal at the bottom of the pack, and healthcare and pharma, a second day in a row where you're seeing underperformance.
If you look at the sectors, the ones, Alex, which actually did see a run up in those last 2 to 3 months during the times of war, are the ones which are seeing profit booking. So it seems that people are actually just trying to take money off the table and now trying to find opportunities at lower levels where they can invest in. Because see, look at defense. That was one of the sectors which did see a good run up. Auto, pharma, PSU banks, and the metal pack. So it's an interesting, I would say, circle that we are seeing right now.
Yeah, you want to put everything in context and then we'll jump in.
Let's look at that. I mean, third consecutive session of gains is what you're looking at in terms of Nifty 50. And this is ahead of the weekly expiry. And as Alex and I were mentioning, 24,000 does remain the crucial hurdle that we want markets to cross. Gains largely led by Reliance Industries, HDFC Bank, and you have the metal index, which has been losing the most owing to weakness in aluminium names specifically, and you have the steel companies also, which are adding to that kind of pressure. Wix, again, declined to the lowest level since February 2026, so this is one of the positives. And now a decisive close about 24,000 or 24,100. That is something that we will be eyeing, because that could probably trigger a move towards 24,300 to 24,500. The strategy that people are preferring right now is buy on dips. So at lower levels, you're seeing that buying interest which is coming in, as long as the key support levels are holding up. Talking about Bank Nifty, yes, it is consolidating. However, the PSU banks weighing are the ones which are weighing on the index. And you're talking about that immediate support, which is resting at 57,110. And the base is seen near 56,950. A clean clearance, about 57,450, will then open the path directly towards 57,638 and 58,000. But for that to happen, you will really need the private sector banks to participate, because that's the space which has been lagging, and it's mainly the PSU banking space which has seen a run up. Even if you have to look at the last 1 month, your private banks have tried to play a catch up in the last 1 month if you have to look at the private bank chart as well. So that's what we're looking at, Alex, overall.
This is significant, right? It has to do with Dixon, and we've got exclusive information coming through with regard to the Dixon-Vivo joint venture. There is an update that has come through from the Interministerial Committee that was looking at this proposal. And let's go straight across to our bureau chief in New Delhi, Shrimi, who's picked up this exclusive information, joining us on the phone line to tell us about this. Shrimi, significant update here. Tell us about it.
Absolutely, Alex. As government is likely to approve the proposed joint venture between Dixon Technology and Chinese smartphone maker Vivo, and this is according to sources familiar with the matter. An interministerial committee which comprises of NETI officials, Ministry of Home Affairs and other concerned stakeholders is understood to back the proposal at a meeting held on Saturday. And in fact, the recommendation has gone, which will now move through the prescribed regulatory process before a final approval is granted. But that is more of a procedural. The nod has already been given during the Saturday meeting of this, during the interministerial meeting. So do note the fact that the approval process has taken a longer than expected, partially due to the regulatory scrutiny around the Vivo India. And company has been under investigation by the Enforcement Directorate over alleged violation of foreign exchange and anti-money laundering regulation. And Vivo has been denying the wrongdoing and said that they are cooperating with the authorities. But this development is significant for Dixon because they have been talking about it and previously also indicated that Vivo partnership could add 20 to 22 million smartphone units annually over time and materially enhance its manufacturing scale. So big development. However, we reached out to Dixon for the official comment, but they declined to comment on the latest development.
Yeah, absolutely. Shrimi, thanks so much for joining in and giving us those exclusive details. Pull up the intraday chart for Dixon, and it is now trading with gains of about 0.8%. And you can clearly see the spike after the information came to light. There's a spike that is ongoing right now. So let's get in our experts. We've got Akshay P. Bhagwat, who is with JM Financial, as well as Sunny Agarwal of SBI Cap Securities. Sunny, I'll come to you first. A significant development from the perspective of Dixon Tech, because this has been in the works for some time. And if it does come through, as Dixon has pointed to earlier, it could lead to the addition of 20 to 22 million units annually over a period of time. How do you rate this?
Good afternoon, everyone. Good afternoon, Alex. I think definitely a big development for Dixon. So we all know that for FY27, the company has guided for a flat volume growth as far as mobile count is concerned, and 10 to 12% kind of value growth purely driven by increasing ASP on the back of recent rise in the memory prices. So JV with approval of JV with Vivo will definitely add a big kicker in terms of volume growth for Dixon, and that should lead to a re-rating. Anyway, in the second half, we will see that camera module, or for that matter display module, will start going on stream, and that should be again a big kicker in terms of margin going forward. To some extent, FY27 we will see 50 to 60 bips impact because of the drying down of PLI benefit. However, FY28 may again see a margin recovery. So again, because of this approval, maybe second half of FY27 seems to be better a place in terms of volume growth on mobile front, and then FY28 because of the backward integration, again margins should expand. So obviously a big development for Dixon in case this approval goes through.
Although if you look at the EMS space and you look at the players involved, Sunny, then apart from a Sirma SGS, there has been a relative underperformance. Is this the springboard that Dixon would need to once again recoup some of those losses and reach those heady levels that it saw earlier? And what is the call on Dixon?
Yeah, definitely. I think as of now, assuming that Vivo approval is not in place, Dixon is trading closer to its fair value, 12,500. But in case there is an Vivo approval and FY27, in case they are able to capture some volume during FY27, I feel maybe 10-15% kind of earning upgrade can be seen as far as Dixon is concerned. And commenting about other EMS players, obviously Sirma SGS has been a strong outperformer, and rest of the individual companies had their individual issues. Like Keynes didn't deliver on the cash flow side. Amber, we have seen some margin pressure because of escalation on the raw material side. But again, I feel EMS as a space is well placed structurally from a long-term perspective, as this entire sector continue to grow at north of 20-25%, and within this space, obviously Sirma continue to remain the top pick, followed by a number where we feel fourth quarter was one of the blip in terms of margin pressure, but long-term outlook continue to remain robust as far as number is concerned.
Okay. So that's an interesting take coming in there. Probably a re-rating candidate that could be on the cards. Akshay, good afternoon. Hiral here. If I have to look at the charts as well, in the last 6 months, that stock is down nearly 11 to 12%. However, from March lows, it's trying to play some bit of a catch-up. Basis the news that has come in and what charts are telling you, do you think there could be further momentum here, or are you seeing further weakness?
First of all, good afternoon to all. So for the stock Sirma SGS, that's what you mentioned.
No, Dixon Tech. Dixon Tech is what we are talking about.
All right. So Dixon Tech, I think, is just trying to digest the news as it has come, but all is good till it trades above 11,800. That's an important level you need to mark if you're trading for today or for tomorrow. Probably if today's closing is about 12,000, then you can look forward for targets till 12,400 or 12,500 from a momentum perspective. So continue your buy positions with strict stop losses below 11,800.
Okay. All right. Gentlemen, it's now time to look at our stock of the day, and it is one of the top gainers on the Nifty 50, gaining about 2.5% pull up, HCL Tech, because that's the big news item of the day as well. The Nifty 50 back above 24,000 or very close to that mark. So keep one eye on the benchmark Nifty 50 as well. HCL Tech, by the way, trading with gains of about 3.4% at this point, at the high point of the day. And this is after the company has led the funding round for Sarvam AI, India's premier sovereign AI offering. Let's go across to Jasmeet to understand from HCL Tech's perspective why this is possibly a pretty strategic move that could lead to tailwinds down the line. Jasmeet?
Well, Alex, thank you for that. As rightly said, this is something which will be in focus on the back of how it will have an impact, cross impact on HCL Tech. Well, just to give you a brief about overall IT Pack, they have been acquiring a lot of AI companies on the back to win that AI race and to fill the gap in wherever they lack. Now, this is an interesting one, given that HCL Tech is the first one to invest in Indian AI company, that is a sovereign LLM model itself, which is in focus, and that's why the stock is gaining about 3%. Let's quickly understand the details of the particular acquisition. While HCL Tech leads the overall strategic investment round for Sarvam AI and invests nearly $150 million. That roughly forms 1,400 odd crores and increases its stake to 10 odd % in this particular entity. When you look at the overall valuation of this particular counter, post-money, the valuation for Sarvam AI goes over $1 billion. It's at $1.5 billion. What's interesting to mark here is the overall valuation. The valuation that the company is paying for this particular acquisition of 10 odd % is roughly at 315 times for the FY26 revenue, which stands at roughly 45 odd crores. So there is a risk for this particular acquisition, but it's something to watch out of how does the overall top line patch out going ahead. While if you look at the overall funding, why this has been made, the Sarvam AI will be using the particular funding to accelerate its research and development and to invest further into the models and make it better. Now, how will this help overall HCL Tech? That's something which will be a key focus. Starting with the first point, we have seen the investment will be funding research and development, what HCL Tech is investing. But for HCL Tech, this particular investment will lead to overall development of AI models. Further, it will also help company to gain more order in terms of the government and regulatory. It will also develop industry-specific languages, given Sarvam AI has a lot of language LLM tools which will be used by HCL Tech to make those accessible to the global clients. Further, to accelerate the sovereign AI for government and regulatory bodies. Let's quickly understand what are brokerages telling about the same. While we see the brokerages have been divided, but still positive and bullish about this particular acquisition. While we have Morgan Stanley, which maintains equity on particular counter with target price of rupees 1410. Now, they said the overall investment in sovereign AI may provide a strategic advantage for the company, given they're first moving into this overall LLM space. Further, they also make a note that this may offer sovereign AI edge with government and regulatory firms, which will be a key advantage for the company going ahead, and we might see few government order wins for the company as well. Now, when we look at the other key aspect, we also make a note that with the minority stake, it's still the impact on this particular entity becomes limited, given though Sarvam AI becomes a big tomorrow, but still HCL Tech just holds 11% stake, which will be a key focus. Further, the current investment could turn obsolete also, given if the overall top line doesn't become the FY24, Sarvam AI had zero revenue. Then in FY26, they marked the first revenue of 45 odd crores. So the risk of obsolete becomes a key concern to watch out for. While I also have other brokers note Nomura on this particular counter, which maintained by with a target price of rupees 1600 odd rupees. They say this is first of its kind acquisition and quite unusual than what we have seen earlier. While they also make a note that this will leverage and expand Sarvam's multilingual AI capabilities, which the Sarvam is known for. Further, when we look at the key valuations, HCL is currently trading at 5-year low valuations, this particular counter, though we did see that the overall Q4 was strong for the company. Now, when we look at the overall buy call, the company has 15 buy rating, that's with 33 odd %. Even the brokers in terms of the buy rating are divided, where we have 15 buys and rest are sell and hold calls. If we look at the return potential of this particular counter is 24 odd %, while this comes in after the up moves of today's trade. Now, it's a wait and watch of how does the overall AI equation pans out going right for this particular counter.
Okay, thank you, Jasmeet, for that, and that stock is almost at the day's highest levels. Sunny, how are you looking at a HCL Tech in terms of the acquisition that they have made in terms of Sarvam AI? I mean, do you think there are tailwinds for a HCL Tech over here? Because a lot depends on how Sarvam AI actually performs and delivers overall.
Definitely, I can link this to a similar investment which Info Edge did in 2011-12 in Eternal, when nobody used to talk about food delivery and quick commerce, and now 10-15 years down the line, that has created humongous wealth for Info Edge. Obviously, a small bet from an HCL Tech perspective in terms of LLM or SLM model of AI is concerned. But I'm sure definitely they would have some option to increase the stake in case there is an success which they see in terms of monetization of Sarvam AI as a platform. So I think it's a long-term bet. Let's see whether it turns out to be a good investment for HCL Tech. But definitely it's a strong indication that now even traditional IT services company are seriously thinking about diversification of revenue and are willing to bet on AI-related business model. And just to remind you, HCL Tech was the first company to start reporting separately AI-related revenue and its opportunities going forward. So I think definitely positive in long term. Anyway, valuations have also turned comfortable post recent correction in IT stock. So it's a long-term bet for HCL Tech, and hope that FY28 will be a better year in terms of growth, as we all know that FY27 HCL Tech has guided for 1 to 4% kind of growth, which is slightly on a muted side looking at a current valuation.
I do want to point out once again, before we get to the conversation on metal, the impact on Dixon Tech, because the market looking very closely at this deal. Srimi, our Delhi bureau chief, bringing you exclusive information. If you're tuning in for the first time right now, you probably missed it. So take a look at that, right? Some of those lines at the bottom of the screen. The government likely to approve the Dixon Tech Vivo joint venture. This was in the works for some time. It has a significant bearing on the revenues and the potential for business for Dixon in FY27. Most importantly, Dixon had said that the Vivo JV could add as much as 20 to 22 million units annually over a period of time. And this is something that the government was reviewing over a period of time because of issues that had been highlighted for Vivo, but that has come back to the table right now.
And even if you look at the revenue contribution, you're talking about a large chunk
increase
that could be coming in from this JV as well for the likes of a Dixon. And volume growth is what you've already mentioned. And they've said that if approved, the partnership could actually boost Dixon's growth by almost 45 to 50%. Versus the current 15 to 17% that we are seeing for a Dixon. And this is organic growth that we're talking about without it. So 15 to 17% is the organic growth when it comes to Dixon Technologies. And this JV could boost it by 45 to 50%. So that's the numbers that we're talking about. And that's the exact reason why you're seeing this kind of a surge that's coming in terms of the stock price as well at the day's highest levels. I mean, I think there is no stopping right now. 2.7% up move coming in on a Dixon Technologies. And an interesting story.
Which is quite significant. So if you consider, of course, it's a liquid counter, but it's not the easiest to trade as well, right? It's 12,300 rupees a pop. So considerable volume spike as well in this particular particular counter gaining as much as 2.7%. Now, on the other end of the spectrum, though, Hiral, stocks that are not doing particularly well in trade today, and those are the aluminium pack, right? And you have Hindalco, that's the worst performer on the benchmark Nifty 50, and you have Nalco that's underperforming as well, even more so, down about 4.3%. This has to do with the move in the underlying commodity, aluminium prices cracking overnight. We will speak very shortly on what the implications are for these companies. But before we do, let's give you some context. And Parth's joining in to tell you about what the performance has been over a 3-month period, not just right now. So what are the trends that you're seeing?
Absolutely. So it's very surprising, first of all, that broader market has done well, but today the aluminium stocks are in pressure. If we talk about the stock performance, then Hindalco has fallen 3.5% today, while Nalco has fallen over 4.5%. Both of these counters have corrected over 15% in June. So this is not just a one-day thing. It has been going on in the last 10 to 15 days as well. If we have a look at the reason, then the main reason behind it is the crash in LME prices, aluminium prices. Overnight, these prices dropped by 4.4% to settle at $3,379 per ton. This is the lowest level that they have seen since March 27. Also, the prices have cracked nearly 10% since the start of this month. So this is the main reason why these aluminium stocks are in pressure today. If you have a look at the reason why these aluminium prices have corrected as well, then the main reason comes out to be the US and Iran conflict that has almost come to an end right now. Trump has said that they will be beginning a toll-free transit throughout the Strait of Hormuz. So that is going to ease the supply bottleneck that we saw previously in raw material prices, and this is the key trigger why aluminium prices have fallen down. Also, the weak macroeconomic data that we have seen from China's side, China being the largest consumer of aluminium, this is putting a pressure on the prices as well. Not just that, even the dollar that has stabilized, because majority of the metal trades happen in dollar terms, and when traders are buying from other currencies, they feel a lot of pressure when dollar remains strong. So that is also another reason which is causing the aluminium prices to fall down. Coming to the impact on Hindalco and Nalco, both of these stocks are very sensitive to the global LME aluminium prices. This is because when aluminium prices come down, it results in a direct revenue loss per ton for both of these companies. Comparatively, Nalco is the one that is hit even worse because they are a direct upstream play in the aluminium business, while Hindalco gets a little bit, offset. Hindalco is able to offset its losses a bit due to the Novelis exposure which they have. Lastly, moving on to the analyst recommendations, around 11 analysts have a buy rating on Hindalco with a return potential of 16.8%, while 3 analysts have a buy rating on Nalco with a return potential of 13.2%. Valuation side as well, Hindalco trades at a premium to its 5-year EV by EBITDA, with Hindalco's EV by EBITDA 5 years standing at 6.05 times versus current of 6.54 times. And in terms of Nalco, we saw current EV by EBITDA at 7.35 times versus 5-year average of 6.14. So a premium is what we are seeing both of these counters.
Yeah, I mean, valuations are expensive, but there is further upside that remains from what analysts make out of it. Thank you for that. Rakesh Arora joining in as well. Rakesh, good afternoon and welcome to the show, and thank you for being patiently waiting. We did have a breaking news in terms of Dixon JV being approved, and hence we had to keep you on wait. This is Hiralia. My question to you is, with what's happening across aluminium companies, 2 aspects. A 10% correction is what we've seen in terms of where LME prices go. And to add to that, if you have to look at aluminium as a space, there is a structural deficit where everyone is looking at another 2 years where the deficit could go on. Taking these 2 aspects into consideration, how are you seeing the aluminium prices move from here on, and the impact that could come in terms of companies like a Hindalco, Nalco, Vedanta?
Okay. So good afternoon. There were 3 factors which were leading to rally in aluminum prices. First, obviously, is what you mentioned. There was low inventory into the system and there was deficit globally. Number 2 was, there was a demand tailwind from the AI-led, construction of data centers, etc., which are, kept base metal intensive. And number three was, the Iran and US war, which disrupted a lot of capacity in Middle East. Now, the third overhang is gone. The Iran and US war is history, and market is adjusting to that. Number two, AI, there are certain questions being raised, and maybe that AI investment went way beyond, much faster than what people would have expected, and maybe there's a little bit of slowdown there. And number three is, the demand supply. There was low inventories, but now as I see, we are expecting large capacity coming up in Indonesia. And also, China has been producing at full throttle at their 45 million ton ceiling, which they put in 2017. And inventories are running up because China's economy is, kind of slowing down. So the inventory in China has reached more than 1.3 million ton of aluminium. So all these three things are pointing to that we have hit a ceiling on aluminum price. What is the fair price? According to me, it is around $26 to $2,700. So yes, it has corrected around 10%, but commodities can swing 30-40%, and so there's still a lot of downside to aluminum prices.
Yes, I understand you're talking about $2,800 per ton. I was just reading a couple of analyst reports where an average, what I'm looking at, is $3,200 to $3,000 per ton over the next 2 years is what they are baking in. There is a major differential coming in there. Do you see prices bouncing back to those levels then?
So, very short term, it's difficult to forecast. But second half of 2026, we are seeing almost 0.8 million ton of new capacity in Indonesia. And that would put a lot of pressure. Another dynamic that you need to see is that when you look at the raw material for them, which is alumina, those prices crashed from $800 to $300 a few months back, and now refusing to go up from there. So the cost pressure is hardly anything from the raw material side. There was some cost pressure from the energy side, which is also receding. So I don't see we will revisit the highs of aluminum of 3,500, 3,600. Analysts do tend to follow the stock price, and they have been increasing their assumption of aluminum, prices to $3,200. But any, global research house would have long-term forecast of around 2,700 only for aluminum. So, these analysts will follow the price back downwards also.
Rakesh, hi, Alex here. I'm going to slip in one more question. And from the macro side, right, generally you would say, and traditional wisdom tells you, that a steepening rate in the US, which is expected to take place, if not in the next 6 months, then over the course of the next 1 to 1.5 years, would lead to a stronger dollar, and eventually commodity prices will be curtailed. Would you hold with that traditional wisdom, or are the demand supply dynamics with this whole AI infrastructure going to lead to a different experience?
No, I think there's no shortage of aluminium globally, and there are a lot of capacities coming up. So I don't think the conventional theory of a stronger dollar and weaker commodity is going to get disrupted anytime soon. So that is bound to actually play out. So I'm with you on that.
Finally, how would you play, if at all, the metal space? What is your preference in pecking order?
So, the stocks have just started correcting, meaning like yesterday I was discussing on another channel about Vedanta Aluminium. The fair price that we thought was 432. Even after correcting 10% in last 2 days, it's still way beyond that. So, and the beer valuation is like way below that. So we are far away from, this correction. So I would suggest investors to, use any rebounds to really, exit and get into sectors which are looking much more attractive.
And what would those be? What would those be in your opinion?
So you have been talking about IT. IT is a tactical buy. Then there are, private banks which are looking, extremely cheap. So one half of the market is not really working, and maybe it is time for those stocks to come back.
Those are interesting names that you're talking about because IT has a very divided view, Rakesh. But it'll be interesting to have a discussion with you on IT now that you're talking about it. But we will again connect with you on a later date to discuss IT as a sector as well. But thank you so much. Always helpful to take your views. So book profits in terms of metal names where you can. That's the word coming in from Rakesh Arora. We'll quickly slip into a short break. On the other side, we'll get you top buy today and sell tomorrow picks as well. Please stay tuned to NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you're truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing a company of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of real.
Welcome back. You're watching India Market Close, and it's turning out to be an action-packed one. Not just because the equity markets are buzzing and you have the Nifty 50 very close to that 24,000 mark, but what you can see on the screen to my left, which is Brent crude, which has cooled off even further, down about 2% right now, and heading towards that $81 per barrel mark. It's a significant update. And just a couple of weeks back, Hiral, we were trading around the $100 per barrel mark, and the spot crude and physical market crude was actually higher than that point. So from India's perspective and the balance of payments perspective, it's actually a very significant update. And of course, this is something to watch from the perspective of the rupee as well. So pull up the rupee. It has moved further. It has appreciated just a tad bit. 94.6 or thereabouts. So pull up, 94.57. It's moved further towards that 94 mark. Not too long back was at 97. So it's already moved a significant amount.
And you will have the OMCs which continue to remain in focus. So, I mean, HPCL, BPCL, IOC. What is interesting is that in spite of crude cooling off right now, you're seeing a ONGC which is buzzing in trade as well. You pull up a ONGC on the screens and you'll see the kind of gains that are coming in. That stock is at the day's highest levels, 2% up move coming in. And obviously the marketing margins in terms of OMCs, as Somit has been pointing out since 2 days, that they would be improving from here on. So interesting moves coming in there. But I think one story that we should not be missing out right now is with regards to Dixon. We'll come back to that. Just a quick address in terms of Meesho as well. 2.4 crore shares. 3 block deals have happened on this one. Sellers are not to be known, neither the buyers. And that stock not seeing major moves, but 0.9% lower. It did see that sharp spike coming in there on the, sharp dip coming in there on the back of the block deal that has happened. But that's a large one. 2.4 crore shares is what you're talking about. But moving on. Dixon Technologies, that's the story of the day, where, you know, the JV is something in terms of Vivo is getting its regulatory approvals. That is on the cards, and this is what my colleague Shrimi is picking up from her sources. The stock at the day's highest levels. Renu Bed Pugalia, Senior Vice President at IIFL Capital, joins in. Renu, good afternoon and welcome. This is Hiral on this side. We're talking about Dixon Vivo JV, where a lot of hurdles that I'm assuming they have had to cross to reach this stage. This is not final, but this is what sources are indicating. Once they get the final approval, what would this actually mean for Dixon Technologies? Because the stock is spiked. If you could help us understand in terms of volumes, in terms of revenue contribution, and whether the stock could see a re-rating.
Sure. Thank you. So Vivo JV has been in pipeline and has been talked for almost now 9 months. From business perspective, management had earlier indicated that once the government approval is there in place, within 2 to 3 months, the JV would be operationally rolling out business volumes. So management had guided for close to 33 million units, which is flat smartphone volumes for fiscal 27. And if we have the JV approval coming in, assuming by second half we kickstart the business volumes, that should easily add up between 5 to 10 million units to annual smartphone volumes for them between second half of this year. So clearly smartphone business, which was looking flattish to marginal decline for them for the current fiscal year, will see growth. And more so by fiscal 28 for a full calendar year, we see them achieving close to the 55-60 million handset mark, which they were targeting along with the Vivo JV numbers coming in there.
The implications, Renu, and good afternoon, this is Alex here, for the financials then, because you would have built in your estimates based on that flattish mobile handset volume, right? So that 5 to 6 million addition would have an implication, and more so for FY28. So what are you building in?
So for 27, we had already built in about 4.5-5 million units. So I think most analysts and investors will have some base numbers already in their assumptions. For fiscal 28, we had factored in just about 12 million units from here. So if we see the full volume ramp up, that would drive an incremental upside for the business. But more so, I think from a sentiment perspective, as in when we see the announcement, this will at least address a long-term overhang on the stock, overhang which has been there now for almost 3 quarters. So there will be better visibility and clarity on the business volumes and the market share that we're looking up for Dixon.
Renu, I would want your call as well in terms of what is your rating on the counter and your target price, because this morning itself you had a CLSA note which did come in and they had downgraded the stock to an underperform from a hold. And what they were indicating is that the positives in terms of Dixon are already priced in. High memory prices is something that they were seeing as a negative. Delay in backward integration is something they looked at it as a negative. And they were expecting growth to decelerate in the medium term. And they said that the risk reward was unfavorable for a Dixon. To counter that, how are you looking at, what's your call on the counter?
So we have an ad recommendation on the stock. Our target price is actually nearing the current CMP itself. But if the JV approval comes through, then I think we will have a positive tail impact on the numbers. With regards to other developments, it is broadly memory prices have been up for almost now 15 to 18 months. So this has already been baked in the numbers, forecast, and the stock price. I would say market also has been expecting, at least for the last couple of weeks, announcements and progress on the JV side. So formal announcements may actually see some profit booking from investors also who are looking from a shorter-term perspective. But from a medium-term growth perspective, I think once, given the oil price have also started to stabilize, plastics and input cost over the next 2 quarters will start to taper off. So to that extent, the margin headwinds will ease. Backward integration benefits from mobile PLI ECMS scheme should start flowing in from the 4th quarter of the year. So I would say the negatives or the concerns have already been known and there in the market for some time. Yes, the near-term 1st quarter, probably 2nd quarter also would be weak. But thereafter, we expect performance to improve. So, which is where we have an ad recommendation on the stock.
You have an ad recommendation on the stock. All right, Renu, thanks so much for joining us for that quick perspective. Pleasure speaking with you as always.
Sure, thank you.
All right, let's cut across straight to Donald Trump, the President of the United States, speaking at the G7 meet. Listen in.
Almost $19.1, $19.2 trillion invested in the United States. The record was 10 years ago from another country when it was hot. But we have the hottest country in the world right now. But Qatar's been a great investor. We really rekindled ourselves when I met with you last year, a year ago, probably 13, 14 months. That was a good trip. And
it was May.
So
May, last May, I think.
Yeah,
I mean, a year. Yeah.
that was a great trip, and we established. We've been friends for a long time. We've known each other for a long time. But Qatar is investing tremendous amounts of money in our country, and we appreciate that. Our country is we're building more factories, AI. We're leading AI by a lot. We're building automobile factories. We're building more than we've ever built in the history of our country. No country is ever doing what we're doing right now. No country has ever been able to do. And those factories will be opening over the next year, year and a half. Some are already open very soon. The pharmaceutical companies are coming back. The car companies are coming back from Germany, from Japan, from so many other places, Mexico and Canada. They're all coming back. We lost them foolishly years ago because we had presidents that didn't really know what they were doing. They should have never lost them. But they're all coming back in beautiful, brand new, gleaming factories. In fact, there are a couple of big old plants. And I said, are you going to use that plant? And they said, no, we're building brand new. They're knocking it down. Everything's built brand new, beautiful. It's jobs. And the auto business, we're going to bring back probably, we lost 57% of our automobile business. I think we're going to bring it mostly back. And for chips, we were the king of chips, and then it got stolen from us. We went from being the king to having basically no chip business. The CHIPS Act that was done by
All right, so we'll keep bringing you updates over the course of the day from that G7 summit. But in the meanwhile, let me go across to my colleague Somit Sarkar, who's joining in with all the chatter from the dealing rooms. Somit, very interesting updates coming through on Dixon earlier today and the stock impact there as well. But what are the individual counters that you're focused on?
Well, the first name is on Trent. Now, what dealers are indicating here is that one of the analysts of an MNC broking firm is pushing sell calls on the counter, and this is largely because their channel checks are indicating that the Q1 sales for Trent could be on the weaker side. So keep an eye out for this counter. The stock was up around 5% yesterday in trade. For Reliance Industries, there are buy flows on the DI desk. Dealers are expecting Jio IPO announcement to come in anytime soon. On June 19, do remember that Reliance Industries will be holding their annual general meeting. For JSW Infra, the fundraise is on card, and this is largely because to dilute the promoter holding. But what dealers are now indicating is that GQG could be an anchor investor in this fundraise of JSW Infra. For Shyam Metallics, there are buy flows on the PMS desk ahead of the analyst meet. Dealers are expecting strong commentary to come in from the management side. And lastly, when it comes to Laurus Lab, wild moves are something that we are seeing. The stock was down nearly 3% at one point of time, and this was largely on the back of a buzz of a block deal coming into the market. But what now dealers are indicating is that the block deal size will be very small, and hence we are seeing this recovery coming in the share prices of Laurus Lab. So keep an eye out for that counter as well.
All right, quite a few buzzers there. Thanks so much, Somit, for bringing us those details. Keep an eye on all of the stocks that that Somit has just highlighted for you. Nagaraj Shetty, technical analyst and derivative research analyst at HDFC Securities, as well as Avinash Gorakshakar, who's founder and head research at Avinash Mentor Research Services, joining us right now. Gentlemen, thanks so much for taking the time, and apologies for the delay. It's that kind of afternoon. News is breaking thick and fast. But let me come across to you, Nagaraj. We're holding very close to that 24,000 mark, but failing to cross it. What are the trends that you're seeing for the benchmark Nifty 50 and relative underperformance for the Nifty Bank today?
Hi, good afternoon, Alex. Yes, Nifty has been showing sharp momentum over the last few sessions. I think the trend reversed up on the and I'm expecting Nifty to surpass above the 24,100 levels very easily in the next 1 or 2 sessions, showing some minor consolidation at the hurdle. Eventually, we could see Nifty breaking above the 24,100 levels and reaching towards 24,500 in the near term. As far as Bank Nifty is concerned, Bank Nifty was outperforming, in fact, the Nifty over the last many weeks, showing some consolidation. That cannot be said as an underperformance, but just a breather pattern is forming at the higher levels at the hurdle. I think this is just a temporary pause before the further upside in the near term. So next upside levels to be watched around the 58,500 in the near term.
Okay, so that's with regards to where Bank Nifty goes as we speak. But in terms of Bank Nifty as well, if you can help us understand any picks that you have overall in terms of markets, because you're seeing some bit of momentum that is coming in, Nagaraj.
Nifty frontline and mid-cap PSU banking are looking very positive. If you take up PSU banking bets like a Bank of India, Canara Bank, and Union Bank, they are looking very positive at the lower levels. They have bounced back very well, forming some basis PSU banking stocks in the near term.
Got it. We seem to be having a little bit of an issue with Nagaraj's frame. But Avinash, let me come across to you for a view on what you're seeing today that is looking interesting, because there are a few pockets where there is significant underperformance. But if I specifically ask you about the financial space and what we're seeing and what we marked at the start of this 1 hour as well, which is that the private banking names are doing better seemingly than the public sector banks. Would you buy into that right now? Would you wait on the sidelines in the financial space?
Good afternoon, Alex. I think private banks, we like Axis as well as ICICI Bank. Of course, there are smaller banks like Federal Bank, IDFC First. I believe, the banking sector would be a key beneficiary once the geopolitical situation gets completely, corrected. And most importantly, I think credit growth has been very strong. I think banks are not seeing a large deposit growth. But I think in terms of the quarterly performance, maybe the Q1 numbers may be a slightly tepid number. But in the second half of this financial year, Alex, I think some sort of stronger growth could be expected. My sense is that even the PSU banks could be looked upon, something like an SBI or a Canara Bank. These are banks where the asset quality has improved significantly. The balance sheet is healthy. So I think apart from the banks, we have been telling our clients to look at good quality NBFCs. I think Bajaj Finance is one company, Shriram Finance, which largely supports and finances commercial vehicles, would be also an interesting bet. So all said and done, the financials, including banks and NBFCs, should do well. And I think structurally the story and the theme looks promising for the next financial year.
While we're on the subject of the banks, we've got exclusive information coming through on the bottom of the screen, and this has to do with HDFC Bank. Now, you will know the context. The context, of course, is that the former chairman, Atanu Chakraborty, split ways with the bank in not the best circumstances. And to fill in that gap, you had Keki Mistry that came to the fore and was appointed, of course, interim chairman. What is happening right now? And sources are telling NDTV Profit that the former deputy governor is among the names that are being considered for HDFC Bank's chairman post. Shrimi, with the second big break of the day today, it's a day of hits for Shrimi today. Shrimi, what are you picking up?
Well, thanks, Alex. Very kind of you. So what we are picking up from people privy to the development is that the former RBI DG Rajeshwar Rao is among the names being considered for the top position of chairman at the bank, and the bank is expected to shortly submit its recommendation to Reserve Bank of India for approval. And in fact, Rao is one of the front runners for the chair role, and he is understood to be among the candidates under active consideration, is what indication we are getting. Appointment comes at a crucial juncture of HDFC Bank, as we know. That lender is currently awaiting the finding of an external legal review commission after the Atanu Chakraborty resigned in March, citing governance concerns. So that report is also expected, probably the end of this week or early next week. The review is, of course, expected to examine issue on the governance processes, etc. But against the backdrop, the selection of bank's new chairman assume added significance as the board seek leadership stability while navigating the ongoing governance scrutiny. And of course, the tenure of interim chair Keki Mistry is set to end on June 18th, Alex. And sources indicating that Mistry may receive an extension until a new chair is appointed and receive the necessary regulatory approval. As the RBI regulation says, the appointment of chair of a private bank requires approval after the board finalizes its recommendation. So we need to definitely wait, because a lot of action is coming since the tenure of the interim chair is ending, and then the bank is ready with some name recommendation of Rao as well. And we have sought, comments from HDFC Bank which remain unanswered. Also, we tried to reach out to Rajeshwar Rao for comment, but he did not elicit a response.
Right. Thank you so much, Shrimi. You're on a roll today. I mean, a story after story is what we're picking up from Shrimi Chaudhary. So that's with regards to HDFC. Avinash, any view? I mean, former RBI Deputy Governor Rajeshwar Rao, he could be one of the names being considered for HDFC Bank chairman post. That is what Shrimi has been picking up. What do you make of this? I mean, how do you see the fit in terms of where the bank is progressing?
No, I think Hiral, definitely this is definitely a positive news flow. I think if it does happen, I think the markets will definitely be happy. But I think more importantly, the markets would be looking at key data points. What kind of deposit growth, what kind of asset quality, and overall what kind of growth momentum comes back to the bank. I think Q4 was not very great, and I think at least partially, the markets will be contented that at the chairman levels, definitely a mature and a very senior person would be inducted. But I think finally it's going to be the number and the data performance. So I think we keep our fingers crossed. Hopefully, if the numbers are also much better than what the street expects, then I think you could expect a good bounce in the HDFC Bank stock.
Yeah, absolutely. So certainly one to watch out for. Remember that HDFC Bank has been a rank underperformer. Pull up the year-to-date chart and we'll see where it is at, and the one-year chart as well for HDFC Bank. 784 right now on the ticker. This year itself, the stock is down as much as 21%. Pull up a one-year chart for HDFC Bank and it is, well, down as much as 19% or thereabouts. Quite a bit of that damage or capital erosion has taken place this year as well. Now, a group of stocks that is buzzing in trade today on the back of news flow is the windmill companies or renewable companies that have to do with windmills, and that's because Union Renewable Energy Minister Prahlad Joshi has flagged the issue of aging wind turbines in the country, and he was speaking at the Global Wind Day conference in Goa, and he asked industry bodies to submit a detailed nationwide assessment of old turbines. Listen in.
Since we have a large number of old turbines, including many of 225 kilowatt projects, I would like IWTMA and WIPPA WIPA to submit a detailed assessment within 13 days about the number of such turbines. आप सुन रहे हैं तंती जी? Across the country.
Okay, so, this becomes beneficial as well. Nagraj, if you have to look at both of these counters, because fundamentally, yes, you could see order wins that could be coming in, but on the charts, are you seeing any strength on a Suzlon or an Inox Wind?
I think it looks like Inox Wind showing some bottom reversal. On chartically declined a bit from the higher levels. I think worst period seems to be over for this Inox Wind, and 80.78 is going to be the strong support. The last 2 weeks candle pattern is indicating some revival is on card. I think some more evidence is expected, but I'm expecting this pain for this Inox Wind seems to be over, and more upside is likely in the near term.
Okay, so that's with regards to where wind turbine related companies go. But another stock which is in focus is a Coforge as well. And more than what's happening in terms of the stock price, because your entire IT pack is up in trade, 4.5% up on a Coforge. Its investor day is what is ongoing. And they've highlighted $5 billion revenue vision by FY30 and $2.4 billion by FY26. In fact, the company remains focused on AI expansion as well. And we have Puneet, who's joining in from the Coforge headquarters in Noida, highlighting the key takeaways. Puneet, good afternoon. I mean, an interesting day for you at the Coforge campus. What are you picking up?
We are coming to you from Greater Noida in Coforge's campus. It's a 25-acre campus which entails all of their key functions. And as you can capture around me, today is also a very important day. They're hosting their investor day today, and NDTV Profit is coming to you live from their location. There have been multiple key measures that the company has announced. One of them has been the vision to go to a $5 billion revenue target. Now, it's very important because Coforge generally does not give any kind of guidance. But as you can see and capture the campus around me as well, talks to you about what they are trying to build the company for the future. I spoke about the vision. By 2030, the company is targeting to go to almost $5 billion of revenue versus the $2.4 billion that they are currently by the end of FY26. Why is this important? Is because it's one of its key rivals in the mid-cap space, Persistent, has already given a $5 billion revenue target by 2031. So this is a straight important clarification the company has given in terms of what the expectation is. They've also said that banking, travel, hospitality, all of those verticals will continue to be very important for the company in the near futures as well. And very, very importantly, that the acquisition-led strategy will continue. Now, there have been some concerns because in terms of stock price performance, you've seen Coforge, which goes head-on with Persistent, has taken a much bigger knock in terms of stock price performance over the last 3 to 4 months, led by the models that came out in the month of February. But very importantly, they say that the acquisition-led strategy will continue for the company at this point of time. Encora has been, coming out and been now since May 1st of 2026 captured within the firm as well. But what is also important that they will not shy away from further acquisitions. And finally, the very important detail of what has had an impact because of models, the company has said that they've rebuilt the whole engineering departments from scratch down because of AI-led models. So now that is the starting point. Everything has changed according to Sudhir, who is of course the CEO of the company. But very importantly, we'll be speaking to the management as well tomorrow and get you all of those questions answered. But a $5 billion revenue target by 2030, not a target, a vision by 2030, acquisition-led strategy to continue are some of the most important takeaways coming up from the Investor Day today.
Absolutely. Thank you, Puneet, for that. $5 billion in terms of revenue by 2030. That's the takeaway for me here. Stock at the day's highest levels. But the markets are exactly, Alex, where we started off India market close. I mean, no major moves from there. And I think that's the point where the 24,000 hurdle is something that Nifty 50 is not able to cross. And I think even if it's being, Tuesday, it is expiry today, still, that consolidation is something that has continued.
You know why that is probably what you're seeing on the top of the screen right there, because the Nifty Bank has underperformed today. And despite the fact that HDFC Bank is up and about, State Bank of India and a couple of other bigwigs are not really doing too much. Pull up the intraday, pull up the heat map for the Nifty 50 and you will see what we're talking about, right? So in the top of the list, you'll have Reliance Industries, and Somit told you just a short while back in Heard on the Street, buy flows on domestic institutional desks for Reliance Industries ahead of the annual general meeting and the possibility of that Jio IPO, and HDFC Bank up and about as well, but off the high point of the day, up about 1%. But State Bank of India at the bottom of the pack or losing ground, it's now actually recovered just a tad bit, but it is still lower in trade. Hindalco continues to lose
What
down.
you'll see over here is, though this has recovered, you still have a RIL which has come off from the day's highs where it was
over 2% higher.
So that has come off as well. So that's playing that even-Stevens game right now. I think index management is what is happening over the last couple of days when you see in the last 2 to 3 hours as well, and that's what you're staring at. VIX is very interesting. The cautiousness is out right now. 13.38 is a very good number to look at in terms of the VIX. So the sentiment is absolutely positive. I think action, as we started off, is what you're watching out for. Let's just look at the advanced decline ratio intraday as well, because that will tell you if there is anything that has changed. See, yes, it has widened slightly after converging in between, but again, pretty much even Stevens if you have to see in that last 1 hour of trade. Broader markets and NSE 500 names are very interesting today.
Yeah, absolutely. Drawing to a close in the last few seconds to talk about really, and some of the names here, IT as a pack has done particularly well, and a couple of the names associated with them have done well. On top of the pack, real estate as well. Sonata Software up 20%. Embassy Developers and a bunch of those real estate names, AB Realty, Kalpataru Projects doing well, Brigade Enterprises, so a number of real estate names doing well, Sapphire Foods on the back of that approval.
Both of those have been doing
really well. On the other end, losing end, you have the OFS that has come through, the offer for sale for GIC that is proving to be a bit of a drag. Rain Industries losing ground, aluminium players, a couple of them in this list as well, Avanti, Westlife Foods, so not too much in the way of lose.
I think I saw a little bit of pressure in terms of cement players as well in today's session. So I think it's the metal and the cement pack which are kind of hand in hand that have seen some bit of pressure in today's session. But I think you can't call this a bad market. It's something which everyone is able to digest with, because consolidation is where people are now trying to find opportunities.
Yeah, absolutely. And you'd watch very closely for that 24,000 number on the Nifty 50 and any positive developments on the back of crude oil prices. Remember, that's one of the key fulcrums to pay attention to. It has broken below that 82 per barrel barrel mark, $82 per barrel mark. So any development on that front with it falling further would be positive for sentiment here in India as well. But I think that more or less captures the market as a whole, ending with gains about 0.4% for the mid-cap index and the small-cap index.
Likewise,
or thereabouts, right?
And what's happened to the Indian rupee, I mean, the strength that it's picked up and what's happened to the bond deals, both of them in tandem have been working well as well.
So macro factors are looking better than they were even 1.5 weeks back. So all of that is certainly a key talking point. A lot of key stories have been broken over the course of the last 1 hour. Let me remind you, there's Dixon Technologies, the approval of the joint venture for Vivo, source-based information coming through, the stock gained quite considerably, and HDFC Bank, a new chairman, possibly a former deputy governor of the Reserve Bank of India, Rajeshwar Rao, could be the suggestion that is being made. So watch out for these two counters and any more stories that could emerge over the course of the evening.
And the other thing that you should not be missing is at 5 p.m. a conversation with Sarvam and HCL Tech. And this is going to be the AI moment. That's what we're calling it at NDTV Profit, with all that's happening there.
Absolutely. But that is all for this edition of India Market Close. From Hiral and myself and the team that put this show together, thank you so much for watching. Stay tuned. Lots more coming up in just a bit. This is NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360, real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names. chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today first. So viewers, the Lal Street remained in a consolidation phase through the session with the Nifty hovering near the 24,000 mark. Positive global cues and also easing geopolitical concerns have helped the sentiment, while the Sensex has advanced over 500 points as investors continue to track oil prices and also global central bank actions. And talking about the sector, so most of the sectors have ended the session in positive territory, with realty and also IT stocks leading the advance. However, profit taking in the metal and auto shares have kept those pockets under pressure, even as broader market sentiment remained constructive. And US fertilizer stocks have surged in trade after optimism grew around the potential reopening of the Strait of Hormuz, which is a key global shipping route. So investor sentiment has improved following indications that the US and Iran have reached a preliminary agreement that could really pave the way for smoother movement of commodities across the region. And the development is seen as positive for India's fertilizer sector, which relies on imports of critical raw materials. Also easing the supply chain concerns and improved availability of the inputs have raised the hopes of lower cost pressures, triggering buying interest across fertilizer counters. Viewers, global aluminium prices have come under sharp pressure, with LME aluminium tumbling more than 4% to its lowest level since late March. And the decline has extended the June losses to nearly 10%. This has been driven by easing geopolitical tensions after the US and Iran have announced an interim peace pact, reducing the concerns around supply disruptions through the Strait of Hormuz. And weak economic data from China and firmer dollar ahead of the US Federal Reserve meeting have added to the pressure. So the fall in aluminium prices could weigh on the earnings expectations for metal producers such as Hindalco and Nalco. Viewers, next counter to look at is HCL Tech, which has made a significant strategic bet on India's artificial intelligence ecosystem, leading Sarvam AI's $234 million Series B funding round. So the IT major will invest $150 million, acquiring a 10.46% stake in the company. Sarvam AI, known for building sovereign AI models trained entirely in India, is now valued at $1.5 billion. So the fresh capital will be used to accelerate research and development while also helping scale advanced AI models and also solutions. Now for HCL Tech, the partnership strengthens its AI capabilities and also expands opportunities across enterprise, government and regulated sectors as well. Now looking at some brokerage notes, so brokerages have largely viewed HCL Tech's investment in Sarvam AI as a strategic move to strengthen its position in the emerging sovereign AI space. Now Morgan Stanley believes that the deal could provide long-term advantages in serving governments and regulated industries, though it notes the immediate financial impact will be limited given the minority stake. Nomura, meanwhile, calls it a first-of-its-kind investment and by an Indian IT services company, and also believes that the partnership can really accelerate the development of industry-specific AI models, multilingual capabilities, and sovereign AI solutions. Now, both the brokerages will be watching closely for commercial use cases and also client adoption in the coming quarters. In fact, CLSA has downgraded Dixon Technologies to underperform from hold, citing an unfavorable risk-reward profile after the stock's recent run-up. Now, the brokerage believes several positives are already reflected in the valuation and expects growth to moderate over the medium term. Now, CLSA highlights concerns around rising memory prices impacting smartphone demand, which is likely, a slowdown in the organic volume growth during FY27. And also delays in backward integration. Now, it also notes that Dixon's market share gains in domestic smartphones may be nearing a plateau, potentially weighing on future earnings momentum. In fact, a potential US-Iran agreement may have eased fears of a major oil supply disruption, but investors should not expect crude prices to fall sharply anytime soon. Analyst at Mirae Asset they've cautioned that despite signs of de-escalation in the Middle East, underlying market dynamics and supply-demand uncertainties could really keep oil prices elevated. And the brokerage is saying that any relief in the crude may be gradual rather than immediate. In fact, foreign institutional investors continue to pair their exposure to select Indian stocks, with shareholding data showing FIIs have reduced the stakes in 11 companies for 8 consecutive quarters. Now, the list includes major names such as Eternal, Dr. Reddy's Laboratories, and Sobha. Persistent, foreign selling reflects concerns over valuations, sector-specific challenges, and even global fund flows, even as domestic institutional investors have stepped in to absorb much of the selling pressure. Now let's look at some key counters that were buzzing away in trade today for viewers. First up, we have Devyani International. So the shares of Devyani International and Sapphire Foods have rallied up to 9% after shareholders have approved the proposed merger between the two leading quick service restaurant operators. Now, the deal is expected to create one of India's largest QSR platforms, bringing together brands such as KFC, Pizza Hut, and Taco Bell under a larger operating footprint. Now, investors have cheered the move on expectations of stronger scale, operational efficiencies, and even improved growth prospects. Next counter to look at is Vatek Wabag. So the shares have climbed nearly 7% to hit a fresh 52-week high as investors continue to bet on the company's strong order book, robust execution, and even growing opportunities in the water treatment sector. So the stock has delivered strong returns over the past years, and this has been supported by rising government spending on water infrastructure and also increasing demand for the sustainable water management solution. Analysts remain positive on the company's long-term growth outlook, though valuations have become richer after the recent rally. And viewers, India's vehicle scrappage drive has made only limited progress, with just 3% of the country's estimated end-of-life vehicles being scrapped in the last 3 years, according to a Niti Aayog report. So the study highlights gaps in the infrastructure, awareness, and even incentives, even as the government, really pushes to replace older vehicles with cleaner and more fuel-efficient alternatives. And artificial intelligence firm Anthropic is set to hold discussions with senior US officials amid growing national security concerns surrounding its latest AI technology. Now, the meeting with the US Department of Commerce comes after the company has restricted public access to a newly released AI tool that it previously described as too powerful And reports suggest that the move is being followed, this move followed government restrictions preventing the foreign nationals from accessing the technology. And the development highlights increasing regulatory scrutiny around advanced AI systems as governments seek to balance innovation with national security and strategic interests. Because Japan's central bank has raised its benchmark interest rate to 1%, also taking the borrowing costs to their highest level in more than 3 decades. Now, the move comes as policymakers respond to persistent inflationary pressures, including higher global energy prices. So the latest hike marks a significant shift for an economy that spent years battling deflation and also ultra-low growth. And since ending its negative rate era in 2024, the Bank of Japan has gradually normalized monetary policy. So the decision underscores growing confidence that Japan's economy has entered a more sustained inflationary cycle. And US Fox Corporation has struck a blockbuster $22 billion deal to acquire streaming platform Roku, marking one of the biggest media transactions in recent years. The acquisition gives for access to Roku's base of more than 100 million streaming households, and even significantly strengthens, its position in the fast-growing connected TV and digital advertising market. So the combined company is expected to become one of the largest players in the US television ecosystem. Now let's look at some national news, viewers. The National Testing Agency has welcomed the centre's decision to temporarily restrict access to Telegram in India ahead of the NEET UG 2026 re-examination. And acting on the NTA's recommendations, the government has directed restrictions on the messaging platform until June 22 and also has asked the Telegram to disable its message editing feature until June 30th. Now, the move is aimed at preventing organized cheating networks, curbing misinformation, and also stopping the spread of false claims related to question paper leaks. And authorities are saying that the measures are intended to safeguard the integrity of the upcoming examination. And authorities have stepped up security arrangements ahead of the NEET UG 2026 re-examination, with the Indian Army set to assist in the transportation of question papers to Tamil Nadu's Tirunelveli. And as part of preparations, an army helicopter has conducted a trial run over the city before landing at the Armed Reserve ground. And the move underscores the heightened focus on ensuring the secure movement of examination material and even preventing any disruptions. And with the re-exam just days away, officials are implementing stringent measures to safeguard the integrity of one of India's largest entrance tests. Viewers, the special intensive revision of electoral rolls has commenced across Andhra Pradesh, covering more than 4.16 crore voters across all assembly constituencies, and the month-long exercise will continue until July 14, with officials distributing unique filled enumeration forms to eligible voters. And the drive is being carried out under the Election Commission's directions to update and even verify the electoral data. So thousands of election officials, including booth level officers and also registration staff, have been deployed to ensure smooth implementation of the statewide exercise. And the political battle over the split in Trinamool Congress has now reached the Lok Sabha Speaker's office. So reports are suggesting that Speaker Om Birla will seek the views of both the defected TMC MPs and also the faction led by Mamata Banerjee before taking a call on recognition for the breakaway group. Now, the Speaker's office has reportedly reached out to the Banerjee-led camp, while also legal and procedural aspects of the case are also being examined. Now, the rebel MPs have proposed a merger with the Nationalist Citizens Party of India, adding a fresh dimension to the unfolding political developments. US security agencies in Jammu and Kashmir have intensified preparations ahead of the Shri Amarnath Ji Yatra 2026, with extensive anti-sabotage operations and even area domination exercises underway across Anantnag district. Now, specialized teams are conducting sanitization and security checks along the entire pilgrimage route, covering transit points, lodgement centers, and even parking areas and other sensitive locations. Now, advanced surveillance equipment, bomb detection units, K9 squads, and technical teams have been deployed to identify and even neutralize the potential threats. Authorities are saying that security arrangements are being continuously reviewed to ensure the safe, smooth, and incident-free conduct of the annual pilgrimage. Viewers, parts of Delhi has witnessed light to moderate rainfall accompanied by strong winds on Monday, bringing temporary relief from the prevailing heat. Now, wind speeds touched nearly 93 kilometers per hour in some areas, while showers have helped cool the conditions across the national capital. Weather experts have attributed the activity to a cyclonic circulation over North India and moisture-laden winds from the Arabian Sea. Now, the Weather Department expects thunderstorms and also rain to continue over the next couple of days, although the intensity is likely to gradually weaken and even the temperatures are expected to remain relatively stable before rising again later in the week. Here's fresh details are emerging on the proposed peace agreement between the United States and Iran, with US Vice President J.D. Vance indicating that President Trump could release the preliminary deal before its formal signing on Friday. Now, Vance has described the Memorandum of Understanding as a brief and broadly framed document, while US officials have suggested the Strait of Hormuz could reopen once the agreement takes effect. So, meanwhile, Iran has confirmed a new round of negotiations in Switzerland aimed at securing a final peace settlement, marking another step towards de-escalation in the region. And Iran has said that a permanent end to the conflict in Lebanon is inseparable from the broader peace agreement being negotiated with the United States. And Tehran is insisting that any final deal must guarantee an end to hostilities in Lebanon and also respect the country's sovereignty and even territorial integrity. Now, the remarks comes as efforts continue to formalize a US-Iran peace framework, which is aimed at ending months of regional conflict. And 8 people have been killed after a US Air Force B-52 bomber crashed shortly after takeoff from Edwards Air Force Base in California during a routine test mission. Now, the aircraft went down within the base perimeter, sending a large plume of smoke into the air. Authorities have said that there were no survivors and described the victims as a mix of military personnel, government civilians, and even contractors. Now, the base has temporarily grounded the operations as investigators begin examining the cause of the accident. Now, families of those on board are currently being notified. And Australia's Weather Bureau has warned that El Nino weather pattern has now formed in the tropical Pacific and could really strengthen significantly in the second half of 2026. So forecasters are saying that it has the potential to become one of the strongest El Nino events in nearly 7 decades. Now, the development is raising concerns across global agricultural markets, as excessive rainfall is expected in parts of Americas, while large parts of Asia could face hotter and drier conditions. Now, with crop planting already facing disruptions, fears are now growing over potential impacts on food production, supply chains, and also inflation. Tunisia has appointed French coach Hervé Renard as the new head of coach of its national football team ahead of the FIFA World Cup 2026. Now, Renard, he is one of the international football's most experienced managers, returns to men's football after guiding several national teams across Africa and Asia. Now, the appointment comes as Tunisia looks to strengthen its campaign after a difficult start to the tournament and even improve its prospects in Group F. Now, this move comes after Sabri, was dismissed as Tunisia coach after one World Cup game. Viewers, with that, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next.
US President Donald Trump says that Iran has agreed to never have nukes, rejects $300 million fund claim. Israel rejects the deal, says that we are not bound to US signed deal and we have to look at our own interest. After US announces deal with Iran, 5 tankers sailed through, including 3 Iranian crude carriers, easing supply fears. Through Strait of Hormuz, oil prices hit 3-month lows, with Brent crude hovering around $81 a barrel. Nifty closes in the green for the 3rd consecutive day. HCL Tech and Tata Consumer Products are the top gainers on Nifty 50, while sectors end on a mixed note. Rupee closes at 94 rupees 56 paise against the dollar. Against the US, recovering sharply from the day's lows, that was rupee. Now, Dixon Vivo joint venture moving closer to approval, with sources indicating interministerial committee has backed the proposal. Final approval expected once prescribed regulatory process is completed. HDFC Bank hunts for new chairman. Exclusive sources tell NDTV Profit that former RBI Deputy Governor Rajeshwar Rao is amongst the contenders. Interim Chair K.K. Mistri's term ends on 18th of June. HCL Tech soars after the company announced investment in homegrown artificial intelligence startup Sarvam AI, and Street gives a thumbs up and bullish brokerages as well as stock. Prime Minister Narendra Modi will be attending G7 summit in France today. All eyes will be on his meeting with the US President Donald Trump on the sidelines of the G7 summit. Temporary ban on Telegram in a move to curb paper leak ahead of NEET exam. Center instructs platform to disable its message editing feature in India until 30th of June. Health Ministry tightens the rules on syrups. No more cough syrup without prescription. Government makes doctors' prescription mandatory. NDTV tops Reuters Institute rankings list for the 6th time in a row. Once again, both NDTV 24/7 and NDTV.com have claimed the numero uno spot in the prestigious rankings. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and let's take you through all the top headlines of the day today. And first, to the big story, the Iran-US peace push is really gathering momentum, but the deep mistrust really continues to shadow the process, because the US President Donald Trump is now projecting confidence, claiming Iran has agreed to never pursue the nuclear weapons and predicting major economic gains from this particular deal. Since the peace deal announcement, 5 tankers, including 3 Iranian crude carriers, have successfully crossed the Hormuz Passage so far. But Tehran remains cautious on this particular deal. In fact, Iran has warned US of fresh retaliation if their side of the deal is not respected. Listen in to what Donald Trump had to say about this particular deal.
We have our deal done with Iran, and it should be successful. It goes to a second stage, which I think will be actually easier. I didn't want to attack them last week, but we had no choice. And we did it twice, actually. We were doing it a third time, and we were able to not have to do that. But we have a deal that's a fair deal. It's a good deal. We are not investing any money in Iran, by the way.
All right, and that has a direct impact on the crude prices. So the oil prices hit the 3-month low as investors really assess the implications of a possible US-Iran peace deal. Now, Brent is trading near $82 per barrel range, and while the WTI has slipped below the $80 mark, the easing of geopolitical risk in the Middle East has really helped cool the concerns around sharply and the supply disruptions as well as the traffic through the Strait of Hormuz. However, remember that the markets continue to watch for further details on this particular agreement and its impact on global oil flows. All right, and even as Strait of Hormuz is really expected to reopen after US and Iran signed the deal, well, the officials do tell NDTV Profit that oil supplies may really take weeks to really normalize. In fact, Cesar Sen, my colleague, is here with all the details on what's being said on this particular development. Cesar.
India is watching closely as a potential US-Iran peace deal raises hopes of easing global energy tensions. Now, a senior petroleum official, however, said that the normalization of oil flows could still take weeks even if the agreement holds. Now, once the deal is signed, the reopening of the Strait of Hormuz is expected to potentially allow the crude, LNG as well as petroleum product shipments to resume in the coming days. Industry estimates, about nearly 180 million barrels of crude and refined petroleum products remain stranded in the Gulf, along with more than 1 million tons of LNG. Now, the loaded tankers will start moving as and when the strait reopens. However, most details of the agreement are still unclear, and India is definitely closely tracking developments given the region's importance to its energy security. In markets, oil prices have fallen to a 3-month low of about $83 per barrel, though they remain about 20% higher than pre-war levels. Now, officials also said that prices may also not immediately recover to pre-war levels, given that almost 10 to 11 million barrels per day of production has been shut in West Asia, besides which some facilities have also suffered damages. Now, before the conflict, the Gulf accounted for roughly 40% of India's crude imports, and that clearly underscores what is at stake as supply routes begin to reopen.
All right, all eyes would be on Strait of Hormuz as carriers really take passage through that particular route after the peace deal. Now, moving on to the markets, and Dalal Street remained in a consolidation phase through the trading session today, with Nifty really hovering near the 24,000 mark. Positive global cues and easing geopolitical concerns really helped the sentiment, while Sensex really advanced over 500 points as investors continue to track the oil prices and global central bank actions. Let's take it straight across to my colleague Path for more details on the market roundup for the day. Path.
Nifty closes in green for the third consecutive day, up over 0.5%. HCL Tech and Tata Consumer Products were the top gainers in Nifty, up by over 2.6%. The broader markets have performed in line with the benchmark, with Nifty Midcap 150 also closing in green, up 0.4% today, led by fertilizers and chemicals, and also Coforge, which were the top gainers in the index. Fact was up by over 10%, while Coforge gained over 4.5% today. Similar trend was seen in Nifty Small Cap 250, which also closed in green, up by almost 0.5%, led by Sonata Software and MMTC. Sonata Software was up almost 20%, while MMTC gained almost 8% today. The sectors have ended on a mixed note, with Nifty Realty being the top gaining sector, led by Aditya Birla and Brigade Enterprises, both of which gained over 5.5% today. On the other side, Nifty Metal was the top losing sector today, down by 1.5%, led by Nalco and Hindalco Industries, both of which were down over 3% for the day. Moving on to the sectoral trends, we saw Nifty Realty, Nifty FMCG, Nifty Oil and Gas and Nifty Financial Services end in green for the third consecutive day, while Nifty IT ended in green for the second day in a row. Nifty Bank has also ended in green for the fourth consecutive day, while Nifty Pharma ended in red for the second consecutive day. Also, Nifty Auto, Nifty Metal, Nifty PSU Bank have snapped their two-day gaining streak.
All right. Thank you so much, Parth, for joining in with a roundup on the market action today. But let's take it straight to the money market as well. And rupee closes at 94 rupees 56 paise against the US dollar, recovering sharply from the day's lows as the global risk sentiment really improved. The Indian currency strengthened by around 40 paise from its previous close after US President Donald Trump announced that the US and Iran had agreed to end the conflict. Now, sharp correction in crude oil prices also provided support to the rupee today. All right, let's take it straight to some corporate developments, and sources do tell NDTV Profit exclusively that former RBI Deputy Governor Rajeshwar Rao is amongst the names being considered for HDFC Bank's chairman's post. Now, the bank is expected to submit its recommendation to the Reserve Bank shortly. Meanwhile, the interim chairman KK Mistri's term ends on 18th of June and could be extended until a new appointment really receives regulatory approval. Neither HDFC Bank nor Rajeshwar Rao have really commented on the development or to our queries on this. All right, on to another NDTV Profit exclusive, and Dixon Vivo JV may get government nod. Let's take it straight across to Shrimi, my colleague, for all the exclusive details on this development. Shrimi, what are your sources indicating on this?
Absolutely a significant development, as the government is all set to approve the long pending proposed joint venture between Dixon Technology and Chinese smartphone maker Vivo. As per the sources familiar with the matter, in fact, an interministerial committee is understood to have backed this proposal at a meeting held on Saturday. The recommendation will now move through the prescribed regulatory process before a final approval is granted, and the approval process has taken longer than expected, partially due to regulatory scrutiny surrounding Vivo India, and the company has been under investigation by the Enforcement Directorate over the alleged violation of foreign exchange and anti-money laundering investigation. So Vivo has been, though, denying the wrongdoing and said that they are cooperating with the authorities, but that has taken more time, and this is significant for Dixon as the largest electronic contract manufacturer. The company has previously indicated that Vivo partnership could add 20 to 22 million smartphone units annually over time and materially enhance its manufacturing scale. In fact, management has also described this proposed JV as a key growth driver, while noting that FY26 revenue guidance exclude any contribution from Vivo. We tried contacting Dixon for the comment, but they refused to comment at this moment.
All right, exclusive details coming in. Thanks, Shrimi, for getting us all those source-based information. Moving on, HCL Tech was the top Nifty gainer today after the IT major, remember, announced the acquisition of a minority stake in domestic generative AI startup Sarvam AI. In fact, my colleague Jasmeet is joining in with all the details on the latest bet by the Indian IT major in the AI space. Jasmeet.
HCL Tech leads this round by being a strategic investor and invests nearly $150 million, that's roughly 1,400 odd crores in Sarvam AI. Well, Sarvam AI is an Indian AI company, which full stack company where they designed the model from scratch in India itself. Now, in terms of the overall investment, the company will use this investment from HCL Tech to do further research and development and make the models better. And if you look at the world valuation that HCL Tech has purchased, that 10% stake in the company is roughly at 315 times to the FY26 sales ratio. Now, in terms of the key highlights that HCL Tech will benefit from this particular acquisition is the company would develop language models and also deploy AI solutions across its global client base. HCL Tech will also leverage and expand the multilingual AI feature of Sarvam AI capabilities in India and beyond. While lastly, the company would also want to accelerate overall sovereign AI solutions for government and regulated bodies. While this is a one-of-a-kind acquisition done by HCL Tech, where they're investing in Indian AI company and getting a part of the sovereign AI capabilities, further it's something to watch out of how this particular investment reaps benefit for the company going ahead. While IT companies have been doing a lot of AI acquisitions to fulfill the gap which they have in overall AI capabilities, but it's still a wait and watch of how does the overall acquisitions done by the IT industry pans out going ahead.
All right, thanks Jasmeet for all the details. Of course, the top IT majors in India have been scrambling to get a share in the pie of the AI space. All right, moving on, calming the concerns over E20 shift. Well, the insurers indicate that motor insurance claims will stay intact regardless of the E20 fuel use. In fact, my colleague Nimit is right here with all the details on this development. Nimit, tell us.
Yes, so your motor insurance claims will be maintained and not denied simply on the basis of the fuel that you use, specifically the E20 ethanol blend, which is now government mandated. Now, why this question arises? Because yesterday, the ICICI Lombard put out a blog post explaining that in older cars which are not compatible with the E20 blend, using the same fuel and then making a claim may amount to negligence and your claims may be denied. But they themselves clarified later that same day that no claims will be denied basis fuel usage alone. ACO, whom we spoke to, also said the same thing, that claims cannot be denied simply on the use of fuel. But the question is a little deeper than that. Legal experts that we speak to say that even if a claim is to be made based on damage done because of the E20 use of fuel to the engine, even in that situation, it's very difficult to prove, and the onus to prove this will be on the insurer. It creates a very cumbersome process and a very complicated product for the consumer, which probably is not an attractive option that insurers are anyway looking at right now. So the important thing to understand are 3 points. A, right now there will be no denial, but it's still very difficult to prove any damage caused because of E20 claims. Second, insurers say that they've not seen any claims so far linked to E20 fuel use. And third, insurers and legal experts say that the IRDAI needs to step in and provide regulatory clarity on the issue for policies going forward.
All right. Thank you so much, Nimit, for getting us those details, because as energy transition happens, the insurance also has to catch up with that. Now, Prime Minister Narendra Modi has arrived in Geneva ahead of his visit to France for the G7 summit, where global leaders, remember, are set to deliberate on the economic resilience, international cooperation and sustainable development with geopolitical tensions, trade realignments and global growth challenges dominating the agenda. In fact, all eyes will be on India's engagement with the world's leading economies. And for more on what to expect from the summit, let's take it across to Vishnu Som, who's reporting straight from Geneva.
Well, the G7 features some of the most powerful nations in the world, and there is a very broad agenda this time around, as is the case frequently. They'll be looking very closely, for example, in the situation in Europe and the continued war between Russia and Ukraine. They'll be looking at cybersecurity. They'll be looking at AI. They will be referencing the situation in West Asia as well, where there's been so much in terms of hostilities. These are just a couple of issues, but I think the G7 nations will also be looking, at least some of them, at the changed equation between North America and Europe. So that's likely to come up potentially as well. But for India, this is important because we are over here, Prime Minister Modi is over here as a special invitee of the French President Emmanuel Macron. India is part of each of the important ministerial conversations which have been taking place, not just over here when they begin, but also on the sidelines of G7 and prior to the summit beginning. This, French diplomatic sources tell us, is an important example of how important France sees India. So the G7 process is important for India as well. The Prime Minister would certainly have a say in some of the important international gatherings that we'll be seeing in Evian. So we'll be keeping a close eye out on it for that. But certainly the highlight for most will be the meeting between the US President and Prime Minister Modi.
That's right. We are waiting and watching out for that. Thanks, Som, for giving us all the details. Now, in a move linked to the NEET UG 2026 re-examination, well, MeitY has really temporarily restricted access to Telegram in India. till 22nd of June and also directed the platform to disable message editing till 30th of June. Now, authorities say that the step is intended to really prevent the fabrication and circulation of fake paper leak claims and also curb the spread of misinformation around the national entrance examination. Let's listen in to what the NTA DG Abhishek Singh had to say on this development.
The platform was continuously being misused by scamsters, by fraudsters, by sharing fake question papers as kind of genuine question papers and trying to fool people into paying for those question papers and trying to exploit the anxiousness.
All right, and another important development and the news that we can use, well, the Union Health Ministry has tightened norms for cough syrups, in fact, making a doctor's prescription mandatory for their purchase. Now, the move follows a series of contamination-linked incidents, including the death of 22 children in the state of Madhya Pradesh. Now, the government says that the new rule aims to improve the patient safety, prevent misuse, and also ensure greater medical supervision, particularly for the children who have been taking the syrups. All right, with that, completely out of time on this edition of Profit 360, but do stay tuned to NDTV Profit. Thank you so much for tuning in.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where we get you all the hottest companies and interesting stories about them. And is there any alpha to be made? Let's start with the first company today, but before that, I'd like to give you some hints. Try to guess it. Of course, there are just a couple of players in this industry. You'll guess it by now. Fourth largest electronic retailer in India, and yes, they are in the listed space. Founded in 1980 at Hyderabad. Interesting history they have. And stock is up 29% from March lows. Also, another hint is the mutual funds hold 19% stake in this company. It's pretty interesting. And the company in focus is EMI, not the monthly payments, but Electronics Smart India. This is what we are talking about. But why are we calling this company in KYC? The main question is definitely on their expansion plans, the premiumization, and first of all, the FY27. They have stated that there's an operating leverage kicking in. So we need to understand how much does it translate into margin expansion. And speaking of that, they are largely south-based, Telangana and Andhra Pradesh. Now they are moving their business in NCR region as well. We'll try to understand that expansion. And will the premiumization of the products go ahead? And if that happens, it's a very single-digit margin business. Will that change the profile of the company? And because of that, we'll try to understand what's the growth outlook ahead looking like for EMI. The expected product mix, will there be a change? Will there be more foreign brands coming in? A lot of questions would be asked on that perspective as well. So these are the key questions we will be asking the management, and management is Premchand Devarakonda. He is the CFO at Electronics Smart India. But let's understand what's this all company all about, what's the business model like, and is there any alpha to be made here? It's the 4th largest electronics retailer in India. Also, the company was founded in the year 1980 by Pawan Kumar Bajaj in Hyderabad. Interesting history. Network of over 200 stores across more than 80 cities. So it is expanding, but remember, it's largely concentrated in Telangana and Andhra Pradesh, and now it's expanding in NCR, and also they're looking forwards towards Western UP. Over 8,000 SKUs they have across 100 plus domestic and international brands. So interesting, company, 83 mature stores and 140 non-mature stores. Now, what does a mature store mean? Mature store means stores which are operating for more than 4 years. And as the mature stores come in, the operational leverage starts kicking in. The MBO brand, which they call it, this includes Easy Kitchens, Bajaj Electronics, Kitchen Stories, and even Audio and Beyond. These are the brands. If you are there in Hyderabad and Telangana, you know these brands exist. They're larger partners. They have mobile business as well as Apple, Sony, LG, Samsung. So across appliances and mobiles, they are functioning. Also, the Q4 updates, it was a double-digit growth across all the categories in the 4th quarter. Decent operational update coming in. SSG growth at 12.1%, seeing the current situation. It's definitely there. Value retail is something which the street was quite bullish on, but not now. A couple of years back, they opened 4 new stores in the 4th quarter. And the bill cuts, it's like an operational parameter that has gone up to 20% on a year-on-year basis. Average ticket size on the higher side. Compare that with the industry, that's around 23,287 rupees per spend. Also, the store sales makes how things look. A mobile is very interesting, 44%. It's a fast-moving inventory product. Of course, we have small appliances as well as large appliances as well. Large appliances roughly 43%. So high ticket size is something which the company is dealing in. The cluster margin, South, it's a stable business, but in the North they are trying to penetrate, and that is why the margin pressure is there. The ROE pressure will also come. I'll explain you those numbers in some time, but we'll try to understand more. What may work for the company? The company is going into high potential markets like the Western UP, a very strong purchasing power in that area. Multi-brand outlet, that's the MBO for full form. They are offering better margins in niche categories, and they are going into that as well. Higher average selling prices amongst peers. We have seen that they have their own brands also. Foreign brands are coming in, and of course it's preferred distributor also for the larger brands. So good name coming from South, trying to make a name in the North. But what may not work, there's a lot of competition in North India, so the company needs to take its time to get some market share there. The unit economics needs to improve for the northern markets, and that's what we have seen. Hopefully that can come as well. Lesser coverage from analysts, and this is a little bit of concern despite having so much stake in the DIs as well. So this is the entire picture for Electronics Smart India, but let's try to understand the KYC ratings, what matters, income statement, balance sheet, cash flow. The basics is already there. We get in the return ratios, how the shareholding things have moved, and whether the stock has made money or not for the investors. Also, we have the valuations and the outlook, where we try to understand what happens. Let's talk about the income statement. The first one, largely it's a kind of a, neutral movement, nothing much to look at when it comes to the profit that has been impacted. But remember, the company is going through an expansion, and the Q4 numbers also trend to be a bit mixed. The margin profile of this business, if you have a look at it, there isn't much of a change. It's a single digit margin profile for these businesses. If you could just show the margin profile, how things have moved, and it's quite stable, and largely it's going to be like that only unless they change their product mix. So it's a neutral rating when it comes to the income statement. Let's talk about the balance sheet, how things are moving. And balance sheet, remember, it's a high working capital business, so you're going to see the borrowing levels on the higher side. The cash levels are pretty decent for the size, around 50 odd crore rupees, but there's a lot of changes happening. And of course, in the summertime also, we see the larger appliances. That's where the churn starts happening. So it's a neutral rating when it comes to the balance sheet. Let's also talk about the cash flow. Is there any change happening here? And let's get in the numbers for the cash flow. And for FY26, you see a good cash flow from operations is coming in. It was largely flattish for FY24-25, but a good jump. And because of that, the working capital ratios also have improved. Look at the cash flow operation to PAT ratio. And even the net cash flows overall, despite investing and financing activities coming in, is still in the positive. So I'm going to give this a strong thumbs up when it comes to the cash flow. Return ratios, the expansion which is happening in North India, that's putting a little bit of pressure. And remember, there was a fundraise also where the promoters reduced their stake as well. And that's what we are seeing in FY25 and 26, where the return ratios, the ROC numbers is coming down. So net, I would give a thumbs down when it comes to the ROC numbers. Shareholding, largely neutral. We had mentioned that the promoters had around 73% stake, and that has been falling, coming in at almost 65% stake. But for FIs, they increased their stake and again they reduced it. For DIs, they have actually increased it. So there are some mixed trends coming in the overall shareholding. So I'm going to give this a neutral rating as well. Let's try to understand the street cred, whether the stock has made money for the investors or not. That's the big question. From March lows, of course, there has been a good up move, up almost 29%, but still from 2025 highs, it's down 33%. And from last 1 year, it's down 16%. Last, you can't say 5 years, the listing happened in October 2022. The stock has given return. It's quite decent. It's 86 odd %. But of course, the investors do want some more return. So it's a neutral rating for the one side. So I'm going to give this street cred a neutral rating. Let's talk about the valuations, what's happening here. Two major players are there, and look at the valuation gap, almost a 50% valuation gap coming in. 12-month P, it's around 40 times. And if you compare that with Aditya Vision, a lot of retail interest, value retail going in, that's at 62 times. So definitely this is cheaper than Aditya Vision going ahead. And because of that, I'm going to give this valuation a strong thumbs up. Lastly, let's talk about the outlook. The expansion of the international portfolio is something which the street is looking at. And also, if you look at it, the improving unit economics in North India, that is where the management commentary is coming. And operating leverage, that's expected to play out in FY27. That means a lot of ratios are going to improve, and the new geographies, especially NCR, Western UP, that's where the expansion is taking place. So a lot to cover, to be honest, if you want to become a pan-India player. And of course, they'll try to optimize the supply chain and inventory management as well. So it's a strong thumbs up when it comes to the outlook. But let me give you the entire KYC rating for the company, how things stand. Largely the numbers, income statement, balance sheet have been quite neutral. Cash flows I liked. Return ratios, of course, there will be a little bit of pressure. On the other hand, if you look at it, shareholding street cred has been neutral, but valuations very attractive as compared to peers, and outlook shows a strong strength. The final rating for the KYC is coming to 5 out of 8. It's largely in line with the numbers we generally give on a historic basis. But to understand more, we are joined in by Premchand Devarakonda. He's the CFO at Electronic Smart India. An interesting trivia about him is over 30 years of industry experience, held leadership positions in L&T Group and Coromandel Fertilizers. And of course, he joined the company as the CFO in the year 2019. But the conversation will continue with him just after a short break.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's...
Welcome back to KYC, and now we are joined in by Premchand Devarakonda. He's the CFO at Electronic Smart India. Good afternoon, Premchand sir. It's always a pleasure to have you at NDTV Profit. The first question I'd like to ask is, you have mentioned in the fourth quarter, though it's a bit mixed, that the FY27, the operating leverage starts coming in. Now, what does that mean? Does that change a little bit of margin profile of the company? Because the business model as such is a single-digit EBITDA margin business model. Does that change now?
First of all, thank you very much for giving me the opportunity. See, definitely, as the store throughput improves, so we'll definitely have the operating leverage. So that will definitely improve the EBITDA margins, but it will continue to remain in single digits, but there will be little bit of improvement. For example, if you compare South and North clusters, in North we are currently having EBITDA breaking even, so which will definitely improve, and South is definitely currently in a stable condition, and it will remain at the same level, like 6.5%. Since the summer season went up very well, so we will have like 20 to 30 bips improvement in South region, and North region will definitely be in low single digits.
Right, and Mr. Devarakonda, SSG growth outlook, it was around 12% in the fourth quarter. How are the initial trends looking like for the first quarter?
See, first quarter, as the base was very low. Last year, entire summer season got washed out because of unseasonal rains across India. As a result, definitely it will be quite impressive in the first quarter. Currently, I think we are expecting more than 15% SSG in the first quarter.
Okay, so the up to 15% is the SSG growth which is there for first quarter, of course on a low base. But apart from this, what kind of strategy we can expect for the expansion in the North India? Because you are trying to expand in the Western UP segment also, that Noida area as such. How is the progress looking like?
Yeah. We are carefully examining multiple opportunities. So, like Western UP is one of the options. Then Eastern India is another option. And in the next quarter, I think we are going to be operational in eastern part of India with Kolkata as the base. So that is going to be the first step in the near future. And of course, the expansion will be phased out, and we'll have our presence in UP as well. But initial focus will be in the eastern part of India with Kolkata as the base.
Okay, so Kolkata as a base for Eastern India, and that's definitely a very big market. Of course, we're looking at your business model. There is mobiles, there is large appliances and small appliances as well. But I want to understand a little bit about your premiumization, products which are there. There are a lot of MBOs are there. I have visited also a couple of your outlets in Hyderabad when I had traveled. I saw a lot of expensive gear in the audio segment, the kitchen segment. Just wanted to understand, how does this premiumization play out for your company?
See, right from beginning also, we have been focusing on premiumization. Like, we never dealt with entry-level products in any of the categories. And now the premiumization has reached the next level. Like, there are certain products which are intended, which are targeted at HNI clients. So those things are like kicking in. And we started importing certain brands which are exclusive for us in India. And if everything goes well, I think we will have decent contribution coming from this category.
I just wanted to understand the same thing. Now the contribution in the product mix, how does it change? Right now we have Electronic Smarts India right now, maybe 5 years down the line. How does your product mix or your product offering change?
See, the product mix will remain more or less same. For example, currently we are like about 50% of our top line is contributed by the large appliances, televisions, and home appliances. And about 40% is contributed by 45% is contributed by IT and mobile. So these categories, and that mix will remain more or less same over the next 3-4 years. Only thing, if some new technology comes in, then definitely that might add. But as of now, we don't see anything in pipeline.
And a lot of international brands and tie-ups is something which the company also does. Mr. Devarakonda, any other new brands which are expected to getting onboarded exclusively for you?
Currently, we have about 6-7 brands which are only in the home entertainment segment. So they are going to be available at our stores in the near future. So. And I don't remember exactly the names of those brands, but these are considered to be premium brands.
And last question, this is a bit strategic question for you, Mr. Devarakonda. So when you enter a new market, how do you fight off the competition which is already there with the local players? If you are coming in West Bengal, there is a Great Eastern is there, a lot of bigger names are there. So what's your strategy, to combat the local competition?
See, when we entered NCR also, we had competition. And last year, we have grown at the rate of 30%. So, and even the current year, we are expecting the similar rate of growth. So, the competition will always be there. We have to coexist. And our strategy is only to provide the best experience to the customers and also provide best support, mainly of post-sale. So, that is our critical our KPI for our success.
Right. So customer is something which you put them in strength, and of course for the other stakeholders who are watching KYC. Mr. Devarakonda, it's always a pleasure to have you in our show at NDTV Profit, and best of luck for the future, sir. Thank you, sir.
Thank you.
So that's the management of Electronics Mart India. Interesting value retail play. Valuations are also quite cheap compared to peers, and now they're expanding new areas, especially Eastern India with Kolkata as a base. Interesting story. Let's see how this pans out. And always keep watching KYC and stay tuned to NDTV Profit.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup you're truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on.
Hello and welcome to our special show, India's AI moment, on a big transaction that has been struck. I am Nisha. With me is Alex.
Hi.
All right, let's take it straight to the big story that we are really tracking today. And it's a big moment coming in for the artificial intelligence space in India, as the homegrown AI startup Sarvam AI has achieved a unicorn status in just 3 years with a valuation of $1.5 billion in this particular fundraise, which is, remember, 7 times jump since 2023. Now, out of the $230 million that has been raised, Sarvam AI has also got investment from IT major HCL Tech, which has made a strategic investment of $150 million for 10.5% stake in Sarvam AI. Let's get chatting with both the parties involved in this particular transaction. Let me welcome on the show Pratyush Kumar, who's the co-founder of Sarvam AI. Pratyush, many congratulations on achieving the unicorn milestone. And from HCL Tech, MD C. Vijay Kumar is also joining in. CVK, the stock of HCL Tech was the top gainer on Nifty 50 today. So CVK, while the top IT majors in India are really competing with each other for the AI capabilities, how will Sarvam's partnership and this particular deal add to the heft of HCL Tech by adding the 6th pillar of sovereign AI in your portfolio? And do you also agree that minority stake can be a limiting factor?
First of all, thank you for having us on this show. You almost called out everything, right? We have many growth vectors. This is the 6th growth vector, and we've been really ahead of everybody else in trying to kind of create new propositions. And sovereign AI is a very large opportunity, both in India and in several countries globally. And we think the evolving architecture will be a hybrid architecture with a mix of private small language models which sit within the enterprise and orchestrating with some of the frontier model capabilities for very unique work like deep research and things like that. And this partnership is really a commitment to really make this work. The investment is really a commitment to really put everything to make this partnership work. And we are very excited, and we think we have a great strategy to take this to clients and make this one more big growth vector for us.
That's right. It's a big AI thrust really coming in for HCL Tech, but Sarvam AI, the key factor here. And Pratyush, many congratulations. And what does Sarvam AI really look in 2.0 version after this fundraise and with this new partnership?
Good evening again. Thanks for having us. It's interesting you called out Sarvam 2.0. That's the terminology we use inside the company to define this moment. Look, when we started the company 2.5 years back, the intention was this is too important a technology not to have the R&D ability to build this from scratch, right? And Sarvam 1.0 was a series of steps we climbed towards building the capability to train and large language model from scratch. That's a capability that very few companies have globally. And in fact, outside the United States and the Chinese ecosystem, only Mistral from France and Sarvam from India have trained from scratch a model that is larger than 100 billion parameters. So firstly, Sarvam 1.0 was establishing that we can do it. Now in Sarvam 2.0, it is very clear that this capability that we have developed is widely useful. Not only is sovereignty a matter of every nation wanting to own its own control of AI, but every company, as CVK was saying, might want to run parts of its AI stack itself out of needs for cost optimization, out of needs for security perimeters, out of needs for value creation. And that is the opportunity that Sarvam 2.0 right now has, which is take our R&D muscle, build frontier class systems, and take it at scale in India and also global through the partnership that we have built now with HCL Tech.
Exciting times, gentlemen, and congratulations to both of you. Pratyush, I want to come to you first. When we're talking about the need for sovereign AI, I think this is well established. We've spoken about it multiple times, including at the AI Summit. But specifically for you, this fundraise, how does it change your capabilities? What are the levers that you're going to push? Because if you look at India, seemingly the two biggest challenges are the access to compute and the ability to build that very quickly, and the access to data, large-scale data. How do you aim to fix both of those?
That's a good framing, right? See, overall, globally, AI is something that needs a lot of capital. And this capital goes to accelerate a particular loop where capital buys compute buys better models you put out for products and then use that to get more data and you continue the cycle, right? In some sense, in Sarvam 2.0, now we are kickstarting the cycle. This fundraise is interesting enough that we can go buy compute at scale and actually build larger models, deploy that in India, get that to create more data liquidity, which can then be used to improve our entire product stack, right? And I feel that we are sort of entering a fast lap where we can accelerate the cycle and then go even faster, get more compute and zoom out, right? In India, you rightly call out, there isn't as much high quality compute right now. That is in fact also a problem statement that we would like to work on. In fact, we are investing to build the software layer that is part of a data center and making that reliable for companies like us to train models and also serve models at scale, right? But it's really a matter of capital. In fact, the first NVIDIA Blackwell GPU cluster in India is live, and the entire cluster is owned by Sarvam and being operated for our R&D and customers. We will continue to scale that up and continue to sort of get into this international scene of building frontier AI repeatedly with greater acceleration on amount of compute.
Very interesting. I will double down on what you mean by that faster lap. But before I do, CVK, to you first. IT majors, including yours, are on the lookout increasingly for partners globally. And this is only the latest leg for you as well. The question that I have for you is, with this latest acquisition, does that replace some of the existing partnerships that you might have with global hyperscalers, or does it sit alongside that, and will it only prove to be a broader tailwind?
Yeah, I mean, I think it sits along with this. As I said, the enterprise architecture is going to be much more hybrid, and there is a need for frontier model capabilities. We have very good partnerships with other frontier model companies, which we have built, and it's going to be a collaborative solution that we will build. But Sarvam gives us an edge in really driving the private SLMs and sovereign AI capabilities.
Right, but CVK, a lot is really dependent on the execution and the deployment as well as the global adoption as well. So how is this combination of strategic alliance and partnership really going to work? And also to my earlier point on the limited involvement and skin in the game that you definitely have in this partnership, but it's only minority in nature.
Yes, of course. I mean, Sarvam has a great strategy, and we wanted to help in whatever way we can. And I think the investment is really a reflection of our interest and our real intent to make this partnership work. And it's nothing beyond that. And I think with this investment, we will also benefit. It's definitely going to be a great growth trajectory for Sarvam. And we can build a completely new business, which will help both the companies benefit from the revenue streams. And this partnership and the strategic investment is really a reflection of the intent to partner much more synergistically and much more tightly. And that's how we should look at it.
Right. So for Sarvam, this synergy, how will this really benefit Pratyush, when it comes to giving inroads to global relationships of HCL Tech, while HCL Tech has a larger portfolio, but you also get an entry into the big boys and also to compete with others in the same space when you talk about the global AI companies.
No, absolutely. See, firstly, I would like to note that we often keep complaining that our companies are not investing in R&D, and I think this is a great example to celebrate, right? This is Sarvam is very much positioned as an R&D company. It is really a bet that R&D wins. That's what is being made here, and I think it's something that I think shows India's strength. Where hopefully this is one of now many opportunities that India will throw up, where corporate India and a startup or let's say R&D driven efforts can work together. For us specifically to your question, I think the bottom line is we are focused on the core technology and we are still a small team. We are focused on getting to the next model, building something that is competitive and no regret alternative from India. And as we do that, this partnership gives us a lot of opportunity to take our stack global, right? And there are many organizations where HCL Tech enjoys a lot of trust, a lot of context. Private AI is not about context. It's about something that should work for a particular company on their data streams, on their workflows, at their appetite for adoption of AI. I think this is very well known to HCL Tech through its clients, and we would like to work with them and bring this whole platform and the R&D capability that Sarvam has to these organizations. So this is, as I said, in the fast lap that we are in, another accelerant where we can take our stack global to large companies.
Interesting. Pratyush, I do want to ask about, so your largest offering has 100 plus billion parameters, right? And you have several that have lower as well. In terms of the offering that you will give to enterprise, and this was called out by CVK as well, the ability to give tailor-made products, right? So what I'm trying to get at is, will you build a model that has significantly more? Because if you look at some of the large language models, you're talking about 1 trillion plus parameters. Is that the aspiration? How soon can you get to that? And what do you see as the ideal mix in terms of your offerings as you build out your relationships and your revenue streams with enterprise?
Fair question. See, firstly, we will build larger models. I have put it out openly as well. We'll build models, especially for coding, cybersecurity. These are areas where there's an extreme need for sovereign control, and they will be much larger than the models that we have seen. And this funding round enables us both from a compute perspective and also from a point of view of attracting talent into Sarvam, right? However, the stack that we offer to enterprises, just want to give you a sense of what it is that we do. We do a combination of multiple things, right? One is we have something like voice AI available at scale. Today, more than 2 million calls per day happen on our voice AI stack. And this has doubled in the last 3 months. Today, more than 10 million API calls happen to server models, which we self-host. This has tripled over the last couple of months. Today, we have an agentic stack which is subscribed by enterprises. In fact, one enterprise has over 300,000 accounts. Recently showed huge improvement in productivity with that. Next month, we are releasing that agentic stack, something similar to what you would use from, let's say, offerings from Cloud AI or chatgpt.com. The entire agentic stack will be available to every company with hosting in India. And finally, we also have the ability to do custom models, which is on your data, on your workflows. We can take our models or open models, and through our expertise in GPUs and R&D and training, able to build a custom model for you and then apply it in an agentic system, which you can actually deploy in the public cloud, on your private cloud, or also on-prem. That's really the offering, right? And I think it's in some sense, a pretty holistic offering in terms of what organizations would like to do. They would like to improve internal productivity. They would like to improve the customer care, and they would like to build their AI muscle. All three of this is covered in the product stack, and we would be figuring out synergies with HCL Tech's own offerings and taking this to the market.
Very interesting. So therefore, from your perspective, CVK, you've been one of the few companies that has gone out and spoken about your AI revenue, and you describe it as as advanced AI. You specifically made that distinction. It stands at over $600 million annualized. But if you look at what you get from Sarvam right now, does it sit on top of some of your enterprise offerings and therefore add that that efficacy that they bring to the table, or one more layer to that, and add to the offering? Or do you now reach out to multiple more clients, and can you scale that revenue very quickly in FY27? What's the kind of outlook that you have?
Okay, both are true. It sits on top of some of the offerings that we have, and it also helps us to reach out to a lot more clients. It will have very limited revenue impact in FY27. But I think what we are most excited is the trajectory it offers, and I think it's a most appropriate solution for large enterprises, and that's what really matters. And it's really about being more than revenue. How can you be increasing your relevance in this AI world for every enterprise? And that's what we are constantly thinking and enhancing our positioning.
I just want to try and push you on that. So if it's not just Sarvam, but you must have an internal target or internal trajectory, if not FY27, then pushing on to FY28, what is the kind of AI revenue share that you will see based on the intent that you've shown with this acquisition as well, CVK?
Yes. We have called out this advanced AI revenue, and as you said, this is different from what AI revenue others call out. And our strategy is this will grow at about 30% year on year for many years. And this will really add a little bit more to that growth and really create that mindshare and the differentiation that we continue to create in this market.
So CVK, you're a listed company and there has been a capital deployment of $150 million. In terms of numbers, how will you present to the stakeholders in terms of this return on investment, first of all, and by when you see how much performance really coming in and baking into your AI revenue at this particular moment? What is the estimate? At least give us a sense on that, and also on the execution risk. How would you really allay the fears or some of the concerns that have been raised by some of the brokerage reports about the execution risk inbuilt into this? And on the other hand, it's all about adoption in the enterprises, and they're also related to mission critical when we talk about sovereign AI, and it's critical sectors like defense, infrastructure, even government roles. So while this is a sensitive space, adoption is a key risk, and on the other hand, the return on investment. These are the two pointed areas where the market would like to know from a listed company.
Yeah, sure. We're not specifically calling out any particular revenue or return on investment. It is a long-term strategy, and it's one more new growth vector for us, and the opportunity is very big. And as you said, execution is very important. We are both putting together a strong team who can really kind of understand, take this to clients, showcase, and win. And we will keep you updated as we progress. When we have wins, we'll be very happy to share with you. And you've also listened to us in the quarterly conversations. All of that will give you enough window into how we are evolving and progressing on this front.
All right. And Sarvam, when we talk about the execution as well as the various capabilities that you really all right, so we'll get back to Pratyush. But when we talk about, the talent as well, CVK, in the AI space, how do you define that? And is that one of the big strengths for Sarvam really coming in? And how do you also comment and give an outlook on the AI talent that we have in India to take a lead in the global map?
We have amazing talent available in India. Especially from the academic ecosystem, the researchers, all of that. I think there is enough interest and there is enough talent. We just need to encourage them, get them to the mainstream of the innovation that's happening in the startups and the industries. Bringing academia, startups, and industry will really unlock a lot of opportunities for us as a company and India as a nation. And we strongly believe every one of our employees, we want them to become a super user of AI and deliver 4x productivity compared to what they can do without AI. And a small segment of our people will be AI builders. And this also helps us gain more mind share with some of the top talent whom we can attract to work for us and kind of scale our AI ambition.
Right. So while, Pratyush, you have given an overall vision for Sarvam 2.0, but quickly on the milestones and the more near-term milestones, as well as the voice opportunity and the use cases that you're really working on, and talent as well, very quickly.
Talent, I think India is pretty talented. I think what we miss is experience. This is a frontier technology. To play in this game, you need to have experience. So we are going to kickstart this with more training and also getting top talent back to India. In terms of milestones, as I said, we will be releasing our whole agentic stack with compute in India next month. We'll be releasing our voice stack also to people in a SaaS-like form factor. Currently, voice stack works in an enterprise setting where people come and build with us. We have confidence now that the product is good enough that we can make it available to everybody. And thirdly, I think we'll be building models that are much larger, much more competitive in coding and other tasks, which is essentially the need of the day. And we will be putting all that out for people to use in very soon, right? But next month already you will see a bunch of launches from us.
Pratyush, it might be a little bit of a simplistic question, but you don't need a Ferrari when you want to go to the gym, right? So from that perspective, in terms of the scale that you can reach very quickly with enterprise and the offerings that you might have, you've described SLMs and how you can use that hybrid model. How quickly can you bolster revenue from this stage? Because that's going to be a critical lever that will determine how quickly you can generate the other parts of the flywheel as well.
Absolutely. Getting revenue and getting data liquidity is very, very important. And I think we are very focused on that. We are seeing already great opportunities, whether in document AI, voice AI, agentic AI, across all these different verticals. We are seeing revenue pick up, and the product launches that we will do will only add to that. And it's very clear to us that we're an R&D focused organization, but it is revenue and experience of deploying these models at scale is what gives the fuel to build the next model. We don't want to mindlessly go about building larger models. We are very clear on that, and you will see updates from us on the direction.
Is the dream to in the very near term compete with the biggest names in the world of AI?
I mean, there's nothing else worth doing, right? I think this is such an important area. India cannot not have a game in this arena, and I think it's a start of the Sarvam 2.0 as something where we are globally relevant, and we will scale up and compete.
All right. Thank you so much, Pratyush, CVK, for adding more light on this partnership. It's truly India's AI moment, and all the best and congratulations to both of you. Thank you for joining in. So clearly a lot of dreams attached to the AI thrust by the Indian companies, and to take it more global and be more competitive when India really charts its global map when it comes to artificial intelligence. From Alex, myself, and the entire team, thank you so much for tuning in.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together. with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
The rupee was in a free fall. Alarm bells were ringing. A lot of predictions were alarming, if you will. And at that point of time, the Reserve Bank of India and the government have put in some steps to try and arrest the fall of the rupee. The question, though, really is not about just those steps, but what's the broader macro like for the currency and for the bond markets, and what's the outlook over the next 6, 18, 24 to 36 months? I think that's the extent to which maybe we can look forward. I don't think it's possible even to look that far out, but I, as a journalist, am going to press my guests to do that. And we've got two perfect men to try and talk about that. Jayesh Mehta, Anand Narayan. Gentlemen, thank you so much for being with us in the studios.
Our pleasure.
Okay, so Anand, let me start with you, because you had, put out a post saying time bought, not problem solved a few weeks back. Now, from that time until now, there's a flurry of activity. Some tax concessions, OMOs, etc., etc. We've burned some precious dollars as well. Is this the change that was needed? Is this something that solves the problem?
Neeraj, I think what it does is it brings in a lot of dollars into the country, and it also brings in a lot of deposits into the banking system. So what was announced on 5th of June, one from the government was, of course, the big announcement on the tax. The ordinance issued, which basically said that foreigners will not have to pay withholding tax on either interest or on capital gains on government bond holdings, which paves the way for hopefully eventual inclusion of India into the Bloomberg Aggregate Index. That should bring in $25-30 billion over the next 1 year or so. Okay. From the RBI, the swaps that they announced, both for PSUs raising ECBs as well as for banks raising funds, and importantly for FCNR deposits, that again looks very attractive. While the market is waiting for the final FAQs to come out from the RBI, it does look like this does allow for a lot of leverage to be built in, which means we could easily see $50-60 billion, maybe even more, coming through these routes as well. The discount that the RBI is offering by way of the swap is quite large. It's about 3% per annum running, which is substantial, right? Now, what that does is it brings this flurry of dollars into the country, which are essentially borrowings. These are not permanent flows. These have to be repaid 3 years, 5 years from now. But it enhances the ammunition available with the RBI to intervene in the markets and ensure that rupee does not have an uncontrolled fall. And second, it brings in a lot of liquidity and deposits into the banking system. One thing that banks were struggling with was to meet the liquidity coverage ratio and other requirements. They were not getting term deposits from wholesale and retail investors. This gives them a whole bunch of long-term deposits, which means their ability to lend goes up dramatically, which in turn should create money, it should create credit, it should create more capital formation in the country. So if all goes well, what RBI has done, by albeit paying a large price, is ensure there is a cap on dollar rupee in some form, that you don't see a free fall in the rupee, and that interest rates are also kept low in order to give growth and credit growth a chance.
Jayesh, are some of these jolts needed at times when there is almost a a unilateral belief that the rupee is going to keep on depreciating, and schools of thought saying that, hey, don't intervene, let the rupee even go to the psychological 100 mark and beyond. How does it matter? The structural problem of the CAD plus crude plus outflows remains, so don't intervene right now and spend precious monies trying to defend the rupee. Was this necessary? And now that it has happened, does it arrest the fall temporarily, or is this literally a speed breaker which is of a different magnitude?
So I think this was required, right? Whatever a lot of people might have a different view, but I think this was required because what was happening, it was all free for all, right? And then of course, a lot of economists, a lot of people globally also started saying, oh, because of the trade war and all that, government is letting the rupee depreciate, and this is like, for it helps our exports and stuff like that. I have never been a believer of that. Like, let's be very clear. We are a net importer. Depreciating rupee does not help this country. And our export is inelastic, right? It's like, really speaking, our export services exports are the larger one. And that is going to stay with India. It's not going to change materially with the, currency going up or down. So I think that's a myth. And I think by showing this, at least RBI is saying that, okay, fine, they also had this enough now, okay? So at least from that perspective that, the hearsay which we hear in the, media with some of the experts saying that, yeah, RBI is letting it go, and therefore if people believe that government and RBI wants the rupee to depreciate, they will have their all kind of wild things. Now coming to the need and all that, right? I think we were doing fantastic. Like we have fiscal deficit, current account deficit, all was under control 2 years back, right? It's only last 2 years which really went haywire. And of course, every time we find reasons, the reality is, then people said crude's gone up because the war started, but we had crude going to 120 in 15, right? 15 or so. It didn't have so much of pressure on currency. I think there is other problem on currency. The currency pressure is actually coming out of the outflows, whether it is equity outflows, whether it is FDI outflow, whether it is trading outflow, whether it is genuine outflow. One needs to do that. And to answer your question, does it help? Definitely, it gives you great relief for a short period of time. But unless you plug this outflow, right, maybe you'll get $75 billion. Maybe you might get more than that, right? But if this outflow is not plugged, at some point of time, that will get exhausted. So this is the real situation. We need to really figure it out. What is that outflow? We'll talk about it in some time, but I'm still not a great believer of what we are making the stories about, right? So that's something we need to really introspect. What is this outflow? Why is this outflow happening? And we need to really look into the regulators need to look into the micro data of this outflow.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360, real talk, real reviews across the NDTV network.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Award.
Anant, are we managing the symptoms or are we addressing root cause? Is it even possible to do that? Address the root cause in a situation as volatile and fluid as it is right now? And will we have to keep on managing symptoms when there is a free fall, if you will?
So let me break this up into two parts, Neeraj.
Yeah.
I'm going to add to what Jayesh Bhai just mentioned on the sentiment part. And the second then come to the root cause and the actual flows. Here are some numbers, Neeraj. Over the last 2 fiscal years, the RBI in the spot and forwards market collectively has sold $192 billion. That was the level of intervention they had to do to protect and reduce the volatility in the rupee. The actual demand across current account deficit, across FPI and equity outflows and the net FDI flows was only $75 billion. So $117 billion that the RBI has sold has not gone to the genuine deficit. It's essentially gone to people who are either hedging against the possibility of rupee depreciating or those who are speculating that the rupee will depreciate. So this fear and greed trade of $117 billion was actually higher than the actual core deficit that you saw. Now, to people who say that rupee should find its own level, that's great in theory. In practice, what we know is there is something called reflexivity, which means rather than the fundamentals determining the market level can determine the fundamentals.
Right.
So if it becomes a spiral where everybody is thinking that depreciation is going to happen again and again and again, why will capital flows come in? So what the RBI has done right now, by the way, it already had reserves. It had $580 billion of reserves net of forward sales. It has given an even more forceful message saying, I'm going to raise 60, 70, 80 billion dollars and therefore embellish my reserves even more. And therefore, you'll have to take me on. This helps arrest the sentiment at least. At least this, very perverse selling of rupee and buying of dollars hopefully will be arrested. Then we'll be left with the core flows. Now, on core flows, we have to be careful. This is where the more medium-term issue about that you rightly mentioned has to be discussed. Why is it that we were seeing this core outflows? Clearly, the current account deficit was not the big problem. It was under unmanageable kind of levels. Capital flows were the problem, right? Our net FDI was very, very low. In fact, we were seeing a lot of outflows going from the country, repatriation as well as outward direct investment. FPI investment and sentiment has been pretty negative as well. Those need to be addressed. Now, where we have to be careful is while we have bought time and reserves to keep a lid on dollar rupee and to keep interest rates low, we have to ensure that this does not feed into more demand for dollars and aggravate the problem that we were grappling with earlier. Because currently with interest rates very low, at the time when global interest rates are very high, our differentials are going to be very, very narrow. What you don't want is this narrow differentials again leading to outward FDI or outflows and therefore creating problems for us.
Just explain this for our viewers, Jayesh. Why does this happen? So make it simple for us. Because this interest rate differential, a lot of people will miss the point.
Sure. So there are multiple ways in which interest rate differentials matter. Of course, you would like your interest rates to mirror where your inflation is. And that's our inflation targeting framework. Look at CPI and then decide where your repo rates should be, right? Now, when your differential with the global context becomes very narrow, so for instance, in 2025, the differential between the 10-year bond yield in the US and the 10-year bond yield in India came down to 1.5%. I have never seen this in my 30 years of trading at such a low level, right?
We saw that once.
Only once, maybe. Jayesh Bhai is older than I am. But what then happens is the following. First, the very simple thing. Debt flows into India will not come in because if people think that, you anyway have a currency mismatch and you're only getting 1.5% more, why should I come in? The reverse also starts to happen. Ultra high net worth individuals, they would start thinking if I'm getting, just 1.5% less by actually moving into a foreign currency asset, a hard currency asset, maybe it's worth it. Maybe a lot of the ODI that we saw was a result of that. So that's the second issue. The third issue is if you and I decide that 6% fixed income interest rate post-tax, and maybe Jayesh Bhai is paying 40% tax, which means that the net result he's getting is very, very low, is not worth it. In which case, you would put your money into equity markets. Now, what we did see is this flood of money going into equity markets more than the supply of fresh paper. So pockets of overvaluation are clearly possible. That in turn leads to FDI outflows and to FPI outflows. People who have brought in private equity can take out money because your secondary markets are giving fantastic valuations. Finally, the fourth reason, when your differentials are so small, I can buy forward dollars. The price of the forward dollar against rupee for 1 year, 2 years is essentially based on the current spot price and the differential between the rupee interest rate and the dollar interest rate.
Sure.
So if it's only 1.5%, I can buy 1 year forward dollars at just paying a 1.5% premium over the current spot price. Now, at a time when rupee was depreciating rapidly by 1, 2, 3% every month, this seemed like a very easy deal. The entire fear plus greed trade that I talked about of $117 billion was facilitated by the fact that this differential is so narrow.
Agreed.
So there are various ways in which a narrow differential impacts the exchange market. The bottom line, Neeraj, while we like to see these markets as separate compartments, the reality is interest rate markets, your capital flows, and your currency markets are inextricably intertwined. This is the impossible trinity. So while we'd like to keep interest rates as independent as possible, you have to be mindful of what it does to the external sector.
Agreed. So, Jayesh, maybe you want to add something to this, but I would love to know, because you look at the markets so closely, both currency and bond markets in particular, what happens next? Possibility of the Bloomberg index, etc. Maybe some flows coming in through this window, but otherwise inflows, at least on the FPI side, don't seem to be a reality for the next 6 months, at least based on my conversations with FIs. So what happens next?
So, of course, Anand has, laid it very, very clearly. But, for me, I have been always different thinker for India, right? So, and the same thought I had in 2013, and that's what we saw the problems. So, coming to, yes, I completely agree, right? And in that part, I would say the forward, that 1.5% premium, that's something matters. But expecting, debt flows to come to India because of interest rate differential and all that, it's not really India's story, right? The India story is all about equity flows. So whenever we try to protect currency and by raising rates, that's something we did in July 2013, right? In spite of a lot of negatives and negatives being told, somehow it was still done, and we saw the result, right? So taper term May 2013, it happened 3 weeks. There was huge selling, and then after this, it narrowed down. It remained silent. Then 15 July, we just raised 200 basis points, and at that point of time, it was told foreigners are invested in banking stock. Raising 200 basis points is going to be a major outflow. It's not going to help you getting debt flow. And that's what actually happened. So 15 July to 10th August 2013, you saw so much of outflow again, for the taper term. So I think for us, it's more about the equity story. And that's where if you look at maybe Bloomberg index, another $25 billion will come. You see some traders will come in. But beyond that, the debt market, what I see, the players, particularly the hedge funds and others who buy debt in India, is when they see interest rate falling down to maybe that's where they can make some capital gains, or where they're seeing that currency is appreciating. So this is buying a bond is the easiest way to be long INR, right? So that's something they would do it. But otherwise, on a natural interest rate differential, not really too much of interest. So I think the story for India, and again, you look at the equity investment, it's like 70 lakh crore, right, by the foreigners. That's what is really, really important.
So let me try and simplify this for viewers, Jayesh. Can the rupee, let's try and break it up into 6 months, maybe 18 months if you don't want to do 12 months, and then 36 months. What does the rupee do, according to you? Build a hypothesis and tell us what will happen to the rupee. I'll not hold you to it 6 months down the line because it's a difficult one. Me too.
So I genuinely believe we are, from the foreign flows, we are an equity flow country, right? We have the growth. We have the GDP growth, the best GDP growth. Of course, right now, the wind is against us because the global theme is AI and stuff like that. But that's one part of it. That's actually, I would say, it's a very small part of it. That doesn't mean, like last week, in spite of when we are saying AI thing and all that, right? Last week, if you see some of the block deals, right? Some port company and all that has been bought by big FPI. So why did they buy, right? There's no AI in that.
Yeah, but that's very bottom up, right? Per se. As a nation,
so what I'm trying to say, it is not that because we don't have AI, you just don't touch and buy India.
Okay, fine.
So that's something we need to build on, right? So that one is the AI challenge. But that again, if you look at AI challenge, right? If you look at what we have been taught globally, right? Or from the beginning of the career, like fund managers do index allocation. I think from the time passive index allocation in terms of industries, what is the industry exposure they want to have, right? So if AI or banking, something is doing well, you don't go 100% there. But what has happened in last 10, 15 years, a huge passive fund which have grown. And they follow the index. And index methodology has now changed, getting market cap into it. And therefore, if you look at index per se, it's not following industry diversification.
Right.
Right? And from that perspective, the funds also are not following industry diversification. Not all of them, but passive ones.
So what's the hypothesis then?
So that,
I have 6 minutes on the show.
I'm coming to that. So even with that, that will happen when the index changes. Right? Like we saw recently the index, MSCI index change, and there's a weightage change for, Korea, Taiwan has gone up and India has gone down. So it should impact only to that extent, maybe 2% more, not beyond that. But we have been seeing continuous flow out, right? And that's what we need to address. See, these are all stories being made, right? Like, we said valuation was high, now that we say India AI is not there because we are justifying the outflow.
Jesh, आप दवाई बता रहे हैं, मैं आपको बोल रहा हूँ मुझे पता नहीं है दवाई मिलेगी कि नहीं. आप hypothesis बताइए, what do you think will happen to the rupee? Build your hypothesis, tell me.
So I think
1 minute.
Okay, I think the currency will appreciate. I hope that RBI does not intervene too much while it is appreciating. Let it appreciate. I think parallelly, we have now time in hand. We have got time and ammunition in hand. We need to figure it out and plug this outflow. Unless you plug the leakage, there's no point. But at least now you bought time. Rainy season is over. You got, you can plug your leakage.
India Inc.'s most respected names, chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Hello and welcome to The Big Question. I'm Vikram Oza, and tonight we're tracking this pivotal shift that's taking place in India's technology story, one that could actually redefine how this $250 billion IT services industry is going to compete in the age of artificial intelligence. So this is the big deal today. HCL Tech having just made that bold strategic move, picking up a 10.46% stake in AI startup Sarvam AI. And that leads a $234 million Series B round with an investment of about $150 million. So that deal has now turned Sarvam into India's latest AI unicorn at a $1.5 billion valuation. And very importantly, it signals a push towards building a sovereign, full-stack AI ecosystem from India and for India, and even beyond. So Sarvam is not just another startup, as it were. It is building foundational AI models that are trained from scratch here in India and across 22 plus languages, handling millions of interactions and API calls daily, positioning itself also as a serious domestic alternative to global giants like OpenAI and Google and Anthropic. For HCL Tech, for the company, the gains are quite strategic. Direct access to proprietary AI models, also stronger enterprise offerings. And then they get an edge in government and regulated sectors where sovereign AI is getting critical. But here's the bigger question. Is this going to be a turning point or not for Indian IT giants? Because while HCL Tech is choosing ownership, TCS is partnering with Anthropic. Infosys is embedding AI into client deals. And Wipro, on its part, is scaling through collaboration. So that's what is happening with the Indian tech universe. Now, at stake, of course, is the future of India's tech playbook. Will value now lie in owning AI, having sovereign AI? Or is it simply going to be in deploying the available AI resources better than anyone else for clients? And as global AI capabilities consolidate, can Indian firms afford to stay implementers? Or must they now become builders and owners? We spoke to the key players driving this shift right now, the ones in the news. Just a short while ago, we had a word with HCL Tech CEO C. Vijay Kumar and Dr. Pratyush Kumar of Sarvam AI, and they speak about Sarvam 2.0. Listen in before we take this debate to our panel.
Sovereign AI is a very large opportunity, both in India and in several countries globally. And we think the evolving architecture will be a hybrid architecture with a mix of private small language models which sit within the enterprise and orchestrating with some of the frontier model capabilities for very unique work like deep research and things like that. And this partnership is really a commitment to really make this work. The investment is really a commitment to really put everything to make this partnership work.
I think this is a great example to celebrate, right? This is Sarvam is very much positioned as an R&D company. It is really a bet that R&D wins. That's what is being made here, and I think it's something that I think shows India's strength. Where hopefully this is one of now many opportunities that India will throw up, where corporate India and a startup or let's say R&D driven efforts can work together.
So yes, indeed, they are building that sovereign stack, as it were. Will this open the doors for India's big tech companies to create sovereign AI of their own? Let's take that across to our panel. And joining us on the debate today, we have Pankaj Srivastav, Chief Executive Officer and co-founder of UnoSearch. Along with him, Kiran Monish is with us, AI expert at Dexian India. And Siddharth Sharma is here with us as well, co-founder of Money Tree Partners. Gentlemen, thanks for making the time. But Pankaj Srivastav, now that you're seeing HCL Tech putting in as much as $150 million for that 10.46% stake, you think this is the moment that Indian IT is shifting from being AI implementers to actually owning the agentic stack?
I don't think so. Why? Because see the amount of stake. It is only 10%. So it may give them the strategic insight, but not the ownership. Still, the Indian implementation and partnership-led transformation services business constitutes 70 to 80% of revenue. So this 10% stake in Sarvam AI is it's kind of hedge. It's not owning the entire model. That is what I see.
The start. Kiran Munish, do you agree with what you're hearing over here? When companies like TCS partner with Anthropic, Wipro with ServiceNow, is owning AI even necessary, or can partnerships deliver the same value even faster?
Yes, Vikram. See, owning AI will be necessary but it depends on the use cases. For example, in India, like we have different official languages, right? So in those niche use cases, owning an AI will be helpful, and that's where Servum will be very helpful because like they have already trained on multilingual on all the multiple languages. So ultimately it depends on use case, and also it depends on the industries that we are going to serve. For instance, if it's going to be regulated industries like defense or insurance or finance, then in those cases, owning an AI or sovereign AI would be much more helpful. But for other generic use cases where we need a chatbot or other typical AI use cases, then in that case, we can partner with the available frontier models, use them because they are also cheap to use so that we can use them and leverage them for our use cases.
So this largely depends on use cases. Do you agree with this, Siddharth Sharma? Like you're hearing Kiran say, do you think it's going to be kind of relegated to how you're going to use this? And 10% right now, according to Mr. Srivastav, is not something that you can go by, that it's opening the floodgates, as it were, for Indian tech giants to take that major leap of faith.
Well, I personally find that, just as what Neil Armstrong has said, that it's a small step for a man with a giant leap for mankind. Probably, 10.4% of stake of HCL into this Servum is absolutely a great step where, the indigenous players would be coming with their own state-of-art technology where, Indian AI would be developed to an extent where, India always has a